Hey, guys.
Can you guys hear me okay? That's good. Continue. Sorry, give me just a second. What's going on with my sound here? Hey, Norm, we'll get started in just a minute, guys. Can you guys hear me okay?
What you saying?
Can you guys hear me okay?
Yes.
Okay, cool.
Yeah, we can hear you.
All right. Just want to make sure everything's working. All right, we'll get started here in just a minute. Let me get just a second. All right, exciting times, right? We kind of discussed this move as a potential play. It ended up playing out. I think people should be really cautious where we're sitting right now. I know a lot of you are like, it's going up. I get that, but we're going to talk about that. I got a lot of things right now that are kind of telling me this is not a point to look for entries. You can play the high here, right? Because I think there's going to be a potential high, maybe a month, maybe two. That where you could play the range if you're a trader. But as a long-term investor, like this is not the place you want to be looking to buy. If you're looking to get a position in the market, I think you'll see a pretty hefty pullback from where we're sitting at. Again, it will take time for this thing to play out. And we'll be talking about that today. I think the market's up right now. It is up. Like I said, if you're a trader, I think your trade is not on Bitcoin. It's on altcoins because I think they're going to be next. And you should either already have entries or be looking to take entries in things that have not moved. I've said this many times. If it is pumped up, leave it alone. Move over, find something else. I want to discuss kind of some of the things that have been talked about, I think, in the group as well as on Twitter and stuff like that. And I do this just to educate you guys. It's more to keep you informed as opposed to try to fear you from entering markets or try to fear you from taking trades. It's more of the more informed you are, the better off you are at the current zone of liquidity, right? That's basically what I'm trying to teach you guys is like ignore the FOMO, ignore all the hype and the noise. Like I've got people on my timeline right now talking about Bitcoin's going to go to like 100K plus by June. I can tell you, I have 0% interest in those type of posts, as well as I have 0% thought that there's any chance of Bitcoin going to 100 plus K by June. I think like telling people that your followers is just it's wrong and ignorant in my opinion, and I say it more from the zone of liquidity. And if you do believe in Bitcoin, you're like, well, Bitcoin's decentralized or Bitcoin is separate from the normal market. That's okay. You can believe that. So if you are a true believer in Bitcoin, you're a true believer in crypto, and you think crypto somehow is separate, I'm okay if you believe that. But if that's your argument, then you also have to consider what's the other side of that coin. I believe Bitcoin's different and so on and so forth. But has Bitcoin's halving happened yet? No. So if you're a believer in Bitcoin and a believer in crypto and you think somehow it's decoupled, that's okay. But you also have to follow the rest of the rules too. And what's the other rules with crypto? The halving happens first, then the bull run. Anything beyond that is BS. In my perspective. Why? because we have a repeating pattern in cycles with crypto. It is a very easy to follow. People like to complicate it, make up shit every single cycle, super cycles and all these other things, every single cycle. They're trying to FOMO people in at the top and hold them there. They want your liquidity to stay. Why do they want it to stay? Because if your liquidity stays, guess what? You're going to be the one sold to at the top. You're going to ride it all the way to the bottom, and you're going to be in such losses, there's no point in selling. Or some of you will sell the bottom, and you'll sell it back to them. So that's the one thing I want you guys to understand is like, don't follow hype, okay? Just follow the charts, follow the news, follow the Fed. I know a lot of people keep on trying to anticipate some kind of Fed pivot. It's like, look, what is the Fed doing? Okay, then that's what you should follow, right? And I didn't say what he's doing. I'm just saying like whatever he's doing, whether it's QE, QT, whether it's raising interest rates, lowering interest rates, follow the Fed. Don't fight the Fed. I know we say it time and time again, and I'll tell you that. Look, when we were in the QE process of the Fed, bulls were saying what? What were bulls saying? Anybody? When we're in the QE side.
That they're gonna turn the printers back on.
I can't hear you there, Leon. I don't know if anybody else
I-
heard.
I said-
okay, something's going on here. Hold on one
Oh,
second.
is my connection messed up?
Let me fix this real quick. It looks fun. Hold on one second. Okay, try and speak again. Feels good.
They keep saying that they're gonna turn the money
Okay,
printers
Erica,
back
I
on.
don't-
No, it's me.
Oh, okay. Now try and talk. Sorry.
Okay, can you hear me now?
Yeah, I can hear you.
Okay.
I think I accidentally unplugged it. Go ahead.
Are they saying that they're gonna turn the money printers back on?
Well, no. What I'm asking is
Oh.
what bulls were saying during the bull cycle with the Fed. What were they saying when people were saying the market's going to come down?
I don't know.
Well, the Fed through 2021, what was the Fed doing? Anybody know?
They were giving us money.
They were quantitative easing. That's what the Fed was doing. They lowered rates to zero. They started printing money. That is QE, right? And I 100% back the bulls in that conversation. Why? Because that is what the Fed was doing. I was not fighting the Fed. I was like, okay, Fed's printing, Fed's lowered rates. We're going to continue to keep hovering these higher zones. We keep on playing the game until the violence stops, right? And that's exactly what we did at the top. We just kept playing and playing and playing until the Fed got to a point where they're like, you know what? Party's kind of getting out of control. We're going to send everybody home. And then once the Fed started talking about QT, talking about it before they started doing it, that's where we started taking positions to go short on the market, and we started trying to get ahead of it. These are things that you really, really have to just follow and not try to lead, right? When you're anticipating pivots, what are you doing with the market? Are you following or are you leading?
If you're trying to anticipate, you're probably leading,
You're
but you
leading.
shouldn't. Yeah.
Correct. And if you think that leading is the way to go, I can tell you, none of us are really economists, right? None of us are the Fed. We can't read his brain. You can try and bully the Fed, which is what the market keeps trying to do. They're trying to pressure him by doing what? Holding the market up against inflation, which continues to hold inflation in place while things are collapsing under the interest rates. So we got a two-sided sword, and basically the market's trying to call the Fed's bluff. I can tell you at the end of the day, the market doesn't control the Fed, even if they want to, right? And is the Fed the all being? I would say when it comes to monetary systems, yes, in all cases. And a lot of people like to argue that factor too. They are. They do control pressures on money. Now, we've already seen that through the banking system, right? What is collapsing? The banking system is collapsing. Now, will it collapse? No, I don't think the banking system will collapse. I think it's just fear mongering when people sit there and state that. Um, why? Because they'll find a way to pull the banking system out. That's just how this works. Now, does that mean QE and pivot? No, I don't think that means that at all. They will just bandage the banking system just like what they just did, which we're going to discuss kind of what happened with the basically BTFP that people keep saying buy the effing pivot, right? Really, the Bears are saying buy the effing puts because they're like, we already know where this is going to go. It's going to collapse. And a lot of people want to ignore that, but that's just the facts of things, right? Now, could Bears be a little early to the party? Certainly Bears could be a little early to the party. I mean, it's more upside for now, but hey, this thing tumbles over eventually. And we're seeing that more and more in the length of puts, right? So that's something we should always try to take a look at too, is how far out are puts and what are they looking for? And a lot of puts are looking at 6 to 9 months, right? That's how far out they are. That means anywhere from now till then, you could see that collapse. Again, these are just things that you have to keep an eye on. It doesn't mean that things will collapse tomorrow. Doesn't mean things will collapse in 2 weeks. Doesn't mean things will collapse in a month. And when I say collapse, I don't mean the whole world goes into Armageddon, right? I mean a significant break in the system, forcing the Fed into a pivot. But by the time the Fed pivots, the thing is already broken. The market has already priced in the move, as in they flushed out the entire market at that point. Does that make sense to everybody? Does anybody not understand that portion of how that works? J&A maybe? I'll take your silence as yes, you understand.
I got it.
But yeah, so um basically we have to understand that. That's why when people are coming up with all these narratives right now and they're like, oh yeah, this and that, it's gonna make the markets bullish. Anything that made the market bullish is already priced in. There is nothing else to push markets higher that hasn't already been priced in. You are late to the party at this point. Okay. You were all invited. Some of you didn't find your invitation until 3 hours after the party started. Guess what? It's midnight, 1 a.m. You maybe got another hour or two of party before the person that's running the party sends everybody home. That's the way you have to view these type of rallies. You have to be very cautious in the way you're taking entries and taking exits. Like I said, if you guys want to trade the range, look, perfectly okay. If you're a seasoned trader, you know how to trade the market. This is prime time, right? You can get in on this and probably jump into a bunch of alts and make a ton of money. If you are a long-term investor, this is the dumbest place you could be putting money. Just being real, right? Like, and I know some of you may take that offensively or may take that as be bearish. It's not being bearish. I'm just telling you, like, hey, if you wanted to long-term invest, you had lows to do that. And now you have to wait. Now, this is the time to wait if you are looking to long-term invest for the big pullback. If not, completely retrace all the way back down. I personally think this rally is going to eat itself. And what I mean by that is price is where it is, and I think it's going to right back to the lows. And I'm gonna show you kind of chart information that kind of supports that thesis, and all that good stuff. So let's kind of run through some different things we talked about today. I posted on some stuff today and told you guys, hey, give me your opinion and all replies. I think one person's reply. More smaller banks. Yeah. So again, I'm not going to fearmonger banks, guys. That's not what I'm here to do today. I've told you guys every single time I am completely market neutral. I'm never going to come in here and be like, hey guys, the whole world's dying. You need to sell your house, get out of everything, go live in the woods, hold all your money in cash. Like, I'm not going to tell you guys that. That's not me. But I'm going to tell you, hey, there's a party going on, but that party could reverse and create more opportunities because we are eyeballing opportunities. We're not eyeballing fear. We're not eyeballing FOMO. That's not at all my approach when I talk about these things. So let's get into share screen. And we'll kind of run through some of these. So one thing I want you guys to understand with this is that I wanted to start a specific way. Yeah, we'll start here. So by this article or Google, right, through Axios, which is credible, By numbers of Credit Suisse has totaled assets of 574 billion at the end of 2022, down 37% from 912 billion at the end of 2020. Its asset management arm supervises another 1.7 trillion in assets. 1.7 trillion. All right. Those numbers dwarf Silicon Valley branch. So is Silicon Valley branch some kind of fundamental portion of our economy in this aspect? And keep in mind, this Credit Suisse is not part of the US, it's Europe. So I want you to understand that first off. So if they basically, I don't know, got 10 times the amount of assets, if not more, of Silicon Valley branch, is Silicon Valley branch going to break the back of America if it fails?
No,
No, it's not. It's not at all. So when people sit there and talk about, oh, well, the Fed's already bailing people, look, the Fed's trying to prevent a panic. The Fed could give two S's whether Silicon Valley branch goes underground or not. They don't care. They're just trying to prevent a bank run. And I'll explain that part in a minute. So we can see here, Credit Suisse could gobble up Silicon Valley branch and not even acknowledge they existed. When you look at from an asset perspective, these guys over here were basically almost at 3 trillion at their peak. Think about that. Well, we'll say closer to maybe 2.7, 2.6, but you get what I'm saying. As far as $2.6 trillion at their peak. SVB's highest peak was 212 billion. This is nothing. This is not a break in our system. That's what people got to understand. There has been no relevance to a pivot. When you want to pivot, you want something like this to break or come close to breaking. That's where you start to see a pivot. That's what I want you guys to understand. Look, these things break. And by the time this breaks, the market's already flushed out before the Fed even got a chance to pivot. The Fed pivots after the catastrophic event, not before. That is why bulls are wrong on this. They are 100% wrong on this. And you can go back through history and you can look at it. The Fed always pivots after the event happens. Yes, like Bank of America, for instance, if Bank of America collapsed or came close to collapsing or needed to be bailed out, that would cause such a catastrophic event in the markets that you would see a flush down probably to lower lows in all assets. And then the Fed would pivot. So we're all on the same page on this, right? We understand where I'm coming from with this perspective. So I'm going to take this a little bit further. So I want you guys to understand right here. Actually, this one, maybe not. Hold on. So, okay. So CBO's projection nominal growth of 2023, 3.1%, yada, yada, yada. What is this one? Oh, this is something else I was looking at. Sorry. Approximately 14.45 trillion euros is the GDP of Europe. Okay. The GDP of Europe. So basically, Credit Suisse has how much percent of their total GDP? Roughly 2/10, right? That's a massive amount of their total liquidity sitting in one bank. That is catastrophic. All right, that's catastrophic. Now, what does this say? Even though Credit Suisse has a good chance of defaulting, what does that say?
Stuff's about to get really bad.
Did Europe care that Credit Suisse is literally about to collapse? No, they didn't care. They raised rates 50 basis points. 0.5 is 50 basis points. That is very hawkish. Credit Suisse is literally holding 2/10 of their total, their entire net worth as far as GDP, right? So I want you guys to understand. So GDP is not actually circulating supply. It's how much a country produces, right? So GDP, gross domestic production, imports, exports, so on and so forth. How does the country make money? So this means in total, if that bank were to collapse, their total GDP would also semi-collapse, right? Not collapse as in like go down significantly, but they'd probably lose a good chunk of their GDP because of all the contracts that probably go to that bank, all the money that is being constantly moved back and forth, and the money that would leave the system because of the collapse. Loaners would lose out the biggest, right? This is why loans are going to get more stringent, more tight. So people that are living off credit, those lines of credit are going to start getting closed. That's what's going to happen. You're going to one day go to use your credit card and it's going to say denied, and you're going to go look at your credit and it's going to say, hey, your account's been closed, but go ahead and feel free to pay off your debt in the meantime. That's how these things work. These banks get under so much stress, they can no longer lend. So they start to take that lending away from users that are over leveraged on their credit. AKA you're using 50% or more. Usually I think the ratio is 30% is roughly what they like to have you hold. You can hold 30% in credit debt, but if you hold higher than that, you're a higher risk at default. And the higher risk you are at default, the more likely you're probably going to see that message where they pretty much close your line of credit. So the more and more pressure that banks end up under, the worse it's going to get. So if Europe, and I want you to keep in mind, Europe and the US are very much in lockstep when it comes to making decisions for their overall government, right? Like they pretty much copy each other. So if Europe's willing to go 50, and I know a lot of you are like, well, then US is going to go 50. No, I don't think the US is going to 50. I think the US will do 25. And I also think in addition to the US doing 25, and this is just to keep markets stable, right? It's not because they don't want to go higher. It's because they don't want people to panic and sell off the entire market and start collapsing the banks. So the reasoning is I think we'll do 0.25, and I don't see a pivot. I don't see a pivot. I just don't. As much as people keep talking about it, have no clue what they're talking about, haven't looked into the data, right? Haven't looked into the data, haven't looked at countries that are similar to ours in total GDP. See, so we talked about Europe's GDP, right? 14.45. Now let's go and let's look at where is it at? I have it somewhere over here. I did have it. I had the US GDP. So maybe it's, oh, here it is. So what's our GDP here in the US? Anybody? And I'm asking you guys because I want you to stay interactive. That's all.
All right, 23.32 trillion.
23.32 trillion. So it's 23.32 trillion. So we have what, about almost 10 trillion more than Europe in what we deliver in gross domestic product, right? Do you think a $200 billion bank is going to take down America?
No.
No, it's not. This is why, like, this narrative, it's a joke. It's literally a joke. Like, people keep going to the Fed's debt pay or their bonds page and like, oh, look, they got $300 billion more in debt. No, the Fed is carrying notes from these banks in case they default. Because you have lenders at these banks that may not get repaid, right? Those people that loan money out through credit, and you have the ultimate lender and the last lender of resort. The last lender of resort is the Fed. That means that if these banks default, the Fed will then take the assets they have and they will be the first one to be paid back. And anybody in that bank that had liquidity, a bank account, anybody above FDIC limits, which is $250,000, by the way, and I know they raised it, but if this bank defaults, that it's not going to get paid. Anything above 250,000 is not going to get paid. The Fed is floating the bank. It's basically a float loan, and we'll talk about that too. So when you think about it from that perspective, good. On it. I think they just joined. So when you think about it from that perspective, basically what we've got going on here is we've got basically a panic, right? It's not the Fed panicking to pivot. It's the Fed making sure that the public doesn't panic and screw the banking system. Now I'm going to show you why that is, right? I'm going to show you why, because there's a very important lesson here and why that is. So we understand that Credit Suisse is under significant stress. Europe raised rates 50 basis points. They don't give a shit whether, excuse my language, but they do not care about Credit Suisse. They just don't. They're more worried about inflation. That is what they are. And as every country should be. So if Europe is more worried about inflation than their own banking system, do you think the US is worried about pivoting to save the banking system?
No.
I don't. I think they're more worried about inflation. So I want you guys to understand that from a deep, deep level. Okay. I'm laying out the why I think this is. I'm showing you my thesis and why I think bulls are wrong on this. I just do. Now, does that mean that the party won't continue? Sure, we can get some more partying. 100%, guys. But at the end of the day, everything's not looking good the way it's lining up. Now, I'm going to get to another portion here that I really want you guys to understand. So we got that. So we'll get to the bank term limits. I want to explain that deeper. So this right here, I'll put this in the chat for you guys, is a debt to GDP ratio. How much is too high? It kind of gives you an overall level of a way to understand GDP to debt, right? But I want you guys to see this. So let's go over here. Not trying to plug my Twitter, guys. I posted it here, so I'm showing you here. So this is our fiscal data, right? What is this data showing us? Yeah, it's connected with ECB, exactly. Yeah, but if Credit Suisse were to go under, it would destroy Europe financially. Like, I don't think indefinitely, but good potential. You know, temporarily, you could see a massive flush out in Europe if Credit Suisse were to go in there. Go ahead, though.
If that's the case, why do you think they don't care, Will?
Because I think inflation is more important. I just do it, and I'm seeing that by the rate hike, right?
It's just lesser of two evils, essentially.
Correct. And
Yeah.
you have to choose. You have to choose at the end of the day. And Europe is choosing inflation as being the bigger risk. And like I said, if you look at it from that perspective and you look at Europe and you look at the US, they are very similar countries in their viewpoints and the way that they like to move monetary policies and everything else. I think the US follows in lockstep. I just do. And it's not the US following Europe. They communicate, right? So this is something that they've probably talked about, and Europe's, this is the direction we're going. And the US is like, yeah, we agree. But the US is not being truthful with the public, right? They're just not being truthful with us. And you see that with the constant flip-flopping of Powell, but he always throws in a nuance. Our fight is inflation. And he always gives the number. Our target number is 2%. It's never adjusted. It's never been entertained to raise that. And people really have to understand that. If it's never been entertained, why are people theorizing on it? All right. So this is our national debt. What is our national debt right now?
Was that
I
31
can't even
trillion?
read that number.
31.5 trillion.
31.5 trillion. All right.
Yeah.
What's our GDP?
23, almost 23 and a half.
Is there any possibility, unless we completely stop spending, that we'll catch up to our national debt?
No, that's really bad.
This is what people got to really think about, right? Like this is a very important lesson right here for a lot of people. You have to understand the numbers. This
And
is
that's
why
going
bank
up,
runs are
right?
happening.
They have to
That-
vote on the debt ceiling raise by what, September?
And
So
they're
it's actually-
trying to raise it.
Yeah.
Trying to raise it. It's like, where are you going to? Are we going to double our GDP in national debt?
The debt's gonna, the GDP will probably go down.
The thing that I want you guys to understand is like, this is bad, right? So at some point, I will say this, at some point, spending has to halt. It has to stop. And not just and for that to happen, what does that mean for Fed printing and QE? What does that mean?
Can't print.
There comes a point where printing is not an option anymore. Where we just have to deal with the pain. And that's the biggest thing that I want people to understand. Does that happen now? Does it happen in 2 years? Does it happen in 5 years? Who knows at the end of the day? But I want you to understand that these are the situations we're in, and that could be happening now, right? Again, this is me theorizing. This is tinfoil hat, right? But I'm not going to ignore price because of these issues. I just want you to understand that these exist, right? That's all I'm putting out there. Again, it's not a fear monger tactic. It's these things exist. Keep them in the back of your head when you're theorizing 150K, $1 million Bitcoin. Okay. Keep them in your head when you're talking like I got some people might be talking 7,000 SPY within a year. Has anybody looked at the growth of SPY? You'd be lucky to get 1K SPY in a year once you breach all-time high. When I say 1K more, sorry, not 1K as it going down to 1K, but you know, where it's at 4,000, you'd be lucky to get to 5,000, reach an all-time high in a year. Like the insanity of what people are posting all over the place is it's insane. It's just insane. Let's go into understanding and this is something I brought up in one of the spaces with because Bitcoin, and I want to describe this from a higher level. So this is called a bank term funding program, right? This is not printing money. It's essentially trapped liquidity. So we have to understand there's a difference between trapped liquidity and free flowing liquidity. Does anybody know the difference between the two?
Is trapped like
No.
like bonds stuff that are held up
Correct.
like that haven't yet?
Yep. So it is money that is exchanged, but only exchanged between the two parties. It cannot flow outside of it. So it's basically a loan to the bank that the bank then pays back to the Fed and nobody else. So this means let's say the bank is in the hole for 10 billion in funds, right? They have 10 billion on the books. They have a potential of more bank runs and they need to cover 10 billion to be able to cover future bank runs and current money that is owed to depositors that are trying to get money. So let's say they borrow, we'll say they'll borrow 20 billion, right? Just to make sure they have overhead to cover the difference. Well, they borrow the 20 billion from the Fed. They give the 10 billion back to depositors. That is not extra money. Okay. It is not extra money. So they give the 10 billion back to depositors. They hold the other 10 billion in case they have more bank runs, so on and so forth. That covers them the entirety. Now they're good. Now, what happens after that is they have 1 year to pay that entire debt back to the Fed plus interest. So they were able to pay depositors 10 billion. They borrowed 20 billion, right? So they are right now at 10 billion. So how much do they have to get back to the Fed?
Well, sorry, this is what came out of the bank collapses recently.
Yeah, we can cover that in just a minute. I'll check it out.
Oh, but this isn't that, right?
Yeah, no, this is that. This is what came out of the bank collapse. This is how they're getting money.
They had 0% interest. I thought they were giving it to them with no interest.
Nope. So what they're doing is they're giving them full price.
No,
The
yeah,
value of the
I thought
asset.
they paid it back. Yeah, I thought they paid it back, no interest though.
No, these are interest paid loans.
Oh, okay.
Yeah, these are definitely interest paid loans. This is the route that Silicon Valley Bank used.
But they're not taking their securities, right? They're just giving them a loan based on the securities they have with the upfront.
Yes.
And then whenever it's supposed to mature, right?
Correct. So they are giving them now. They're not giving them market value. Or not market value, but today's market value. What are they giving them?
What they were supposed to mature at whenever they mature, right?
Correct. Yep. So whatever they were. So they are actually overvaluing the assets.
Yeah. They're giving them more because the bonds are worth nothing now that they bought. The interest rates have been raised. Yeah.
Exactly. So the one thing that I want you guys to understand with this is that they've given them more than the value of the bonds. And these banks are able to pay depositors because that's what the money is supposed to be used for. Maybe some overhead, yada, yada. They can spend some of it on different things. And then they didn't have to take that 20 billion that they borrowed and give that back to the Fed. So if they spend 10 billion, they have 10 billion left. Let's say they spend another 2 or 3 billion, for overhead, whatnot, so on and so forth. They have 7 billion left. You have to pay the 7 billion back plus the 13 billion that they're missing that they paid everybody else back to the Fed, and then plus some interest. And it's not much. I remember looking at the rate loan. So typical loans from the Fed is like 4.25, 4.5. But I was looking at these ones, and I think they're roughly in the 0.1 range, right? So 10 basis points, I think, is the cost of these loans.
That's crazy. So they're not even doing the normal rate that you and me would pay for anything.
Correct.
They're
they're cheapening us on them big time.
That's insane.
Yeah. Now, again, there's different ways to look at that. It depends on how it's written up, right? It could be 0.10 compounding per month. It could be, 0.10 during the entirety of the loan. Like there's different ways to do this. I don't know the exact numbers on it, but I just know roughly when I looked through, it was like 0.10 or something like that. So they are paying interest on these loans, which means they're paying more than the loan value back to the Fed. They're then going to get their bonds that are worth less than the value of what they gave them to the Fed for. So they are taking on significant amount of debt. Basically, the bank is with this program. They are taking on debt in the hopes that the economy allows them to bail themselves out. Now, what do you think happens if these banks collapse? As in, like, they are able to take on this debt, and they just weren't able to recover and get the money back to the Fed within the year.
Sorry, what was the question?
If these banks borrow the money and things continue to deteriorate and they weren't able to get the money back to the Fed within the year, what do you think happens?
Everything
They'll probably
crashed.
just extend it.
Nope. A lot of people think that.
Nope.
A lot of people think that. This is not
But
an
they're-
extendable loan.
They take their
okay.
assets.
They take their assets and they
The
liquidate them.
assets. Oh, meaning like the bonds and everything?
Buildings, bonds, chairs,
Everything,
couches,
yeah.
everything.
All that stuff. Yeah.
And is this QE?
No, this is actually QT. It's QT because it's sucking additional liquidity out of the market. A lot of people are seeing this as QE. There's no money, there's no extra money being injected into the economy. You got depositors being paid back their money that they already originally had, which is no additional money. And then you got the bank having to pay this loan back plus interest. It is a vacuum tube loan, which means it is a loan directly between the bank and the Fed. It does the QE is money that ends up in circulation. But does that make sense to everybody? Like, if I give you money like stimulus and you go and buy a new pair of Jordans, right? That's QE. That's expansion. Expansion is basically you're getting money for free that you can spend however you want. Banks are getting money that they have to give directly back to their depositors and pay overhead.
And
And
they'll
it's a
monitor that,
1 year
like the Fed.
turnaround, right?
And it's
Yeah.
a 1 year turnaround, which means they are under a stringent situation where they have to pay this back, right? They have to figure out however they can do it to do it.
Is there
That
strict
CEO might
regulation
sell
on
more
what-
stock.
What's that?
Their
Are they
CEO
regu-
for, oh, sorry. Go ahead.
Is there regulation on what they can do with the money?
Yeah, I don't think that they can like buy any new chairs or buy any new couches or like, make their place prettier or anything like that. They strictly, it's for specifics, right? And those specifics are typically depositors, maybe pay some staff for like salaries, which that could be considered a little bit of QE, but it's not going to be much at all. You're talking like people that make 30,000 a year, maybe 40,000 a year. It's going to be very small amounts of that money that would be used for that, and to continue to hold and be able to support depositors in the future. Does that make sense?
Yeah. So
Very
1
simple.
year.
They have
It's-
1 year.
Oof, that's not looking good for them, for the
Yeah.
banks.
Basically, it's going to keep them under stress for the next year. Now, what do you think that will do to the stock with people knowing that they've taken these loans?
Yeah, it's not gonna make it any
Go
better.
down.
1 year.
Yeah.
Short. I was short on them.
Yeah, it's going to create pressures on their stock too. So now they have no way to create funds because they can't sell their stock because nobody wants them, right? It's going to be a sell-off situation. And then on top of that, they have no way to raise money if depositors don't come. Banks make money on depositors. Not only will depositors be an issue, you also have to consider the fact that people are losing jobs. And so you have less likeliness of seeing depositors.
Even worse, you're gonna see people withdrawing, not just no new depositors. You're gonna actually lose customers too.
Correct. You're going to have a lot of people too fearful to stay in, and this bank is, may potentially
It's
really
already happening,
collapse.
right? I mean, didn't Chase take in like trillions of dollars in Bank of America, same recently?
Yep. Mhm.
Yeah, so it's already
Yeah.
happening.
You've already got moves out of banks. So like a lot of people look, there's a lot of things we talk about contagion, right? Like the FTX could contagion. I'd have never thought the FTX thing would become necessarily contagion. But when you are talking financial institutions and people that have money that can just pull it out at a whim and just move it, yeah, that can become a contagion, right? Money movement can become a definite contagion. Now, what is the government trying to do? Well, they've talked about censoring people that talk about it, so on and so forth. This is their resolution to a bank run. Is to always silence people. But these are just the facts of these things, right? There is real risk in small banks. Do I think that the entire economic system is going to collapse? No. But do I think that the US overall, as well as many other countries, are underwater when it comes to finances of GDP, what we're actually producing versus what we're actually spending? Oh, yes, big time. I think that's a massive issue, but I think it's a longer dated issue, right? It's further out than what we'll probably foresee. But the reality is the more and more that pressures on us, our national debt, the more and more these situations are going to happen. We're going to see more and more bear markets. We're going to see worse and worse bear markets as we continue forward. They keep on putting guardrails in place as situations happen. Mortgage situation happened in 2008, right? What did they do? They put guardrails in place. Now we're getting a banking financial situation right now. So what are they going to do in the future? They're going to put guardrails in place. Nothing is protected at the end of the day. They just kind of put bandages on holes as they occur. That's what people have to understand. These banks right now, they're hemorrhaging. And they know this. They know this. These moves into assets and crypto and everything, I think they're just money grabs. I think there's desperation in the market. The market is trying to grab as much liquidity as it can before I think it takes a full-on exit. I'm looking for a flush out move in many of these markets. And you're probably like, well, you're a bear. You're sitting here. Look how much is pumped up. Look, if you're looking at the market from the perspective of an erect chart, you're looking at it from the wrong position, right? If you buy the drawdown. You don't buy the pump up. It's not logical to do that. And this is something I try to teach you guys on a regular basis is buy the red, not the green. And it doesn't mean the red on the 1 hour, the red on the 5 minutes. It means like on bigger time frames, banks and institutions and companies and all these different places look at higher time frames, weekly, monthly. They don't care about your 4 hour or 2 hour, 1 hour. So always understand that. But this is the banking program that I discussed. Again, it's vacuum tube money, right? When we say vacuum tube money, it means that this is an agreement amongst two people, two entities, that money will not go outside of those two entities, those two people. Right. So the bank had an obligation to the depositor. The bank fulfilled the obligation. The Fed became the last, I forget what I called it, but the last stand for depositors, right? The last funder. Like when it comes to when a bank is under duress, your last stand is the Fed, and the Fed fulfilled that with this BTFP. Now, as far as money going into the system, again, it's the same money that already existed, right? That money already existed to that depositor. It was just stolen / lost through the bank. And so now the bank has recovered that, given that back to the depositor. Depositor is made whole, and that bank has to fulfill and get that money back to give back to the Fed. And if not, they'll be dissolved and they'll probably be absorbed by another bank, which we saw with Hathaway, I think recently. One of the bigger banks actually absorbed Marshall and Hathaway. So that's something you guys can look up too. but that wasn't even covered in the news. Anybody hear about that?
I didn't.
Yeah, because they're hiding these things now. They're trying not to help them. They're trying not to let them become mainstream. I'm sure there's some kind of collusion between news media and the government where it's like, you know, don't talk about these things. But Marshall and Hathaway got absorbed. So and this is why, like, when people talk about, oh, banks can't collapse, the government's not going to let them. No, I talked about this before, and I 100% am behind what I said. I think the whatever freaking Valley branch over there, that I think was a political move. Silicon Valley, yeah, because Silicon Valley is all tech, right? These are all people that, you know, I think it was a partisan move. And then you got Gavin Newsom too, who contacted the White House, which was very suspect prior to this happening. So keep that in mind. And it's not a political thing for me, guys. I don't care what side of the aisle you're on, but you have to see the woods through the trees, right? You see some trees, there's probably some woods. And this is just what happened with this situation. It sucks because when you do these type of things, now people get this expectation that they're going to happen, and people will start be like, oh, well, the Fed will just bail everybody out. No, that's not what's going to happen. Some of these banks have already been absorbed. They will continue to go down and continue to be absorbed. All depositors below 250,000 will be covered. And, you know, in some cases, when they have friends in these banks, they'll come in and be like, oh, we need to cover all depositors, like they did with Silicon Valley Bank. But these banks are getting wrecked. Small banks, not big banks. We talked about it before. A bank of this size could wreck the economy. A bank of this size doesn't even matter. It just doesn't. It just became mainstream because they bailed it out. That's it. And when I say bailout, again, it's not QE, it's vacuum money. Vacuum money. All right. Any questions in regards to any of this? Does anybody feel I'm wrong? You can definitely state yourself. I won't be upset or like, hey, you're wrong. I'm not going to tell you that. If you guys have a different perspective, feel free to chime in. But I did a lot of research into this. Yeah, this is 100% QT because you have to consider it for like this. Look, at least in the short to midterm, I'll give you the numbers. Okay, I'll give you the numbers, and the numbers are the best way to view this. So the bank maybe bought 10-year bonds, and this is what happened with SVB. They bought a bunch of 10-year bonds at like 1.21%, which is nothing right now, right? They ended up in a situation where they had to sell a significant amount of those for losses. That means they lost a percentage, and they also lost a portion of their investment into the 1.2% bonds because they had to sell them into the open market. When you sell things into the open market, you get way less than the value you invested, plus you lose your interest, right? Typically when you sell that way, unless you're above market value. So if you were here like right now, like I've been doing and buying, 2-year bonds in the 5% range, and let's say 2-year bonds tank and go down to like 2.5%, I could sell well above market value for those bonds in the open market because my percentage value is higher than the market value. But when you're lower than the market value in percentage, that's where it becomes an issue. And now you're going to lose part of your investment and lose part of your percentage. So they sold billions of dollars off, lost billions of dollars through selling it into open market, and then asked for this bailout so they didn't have to continue to hemorrhage all their bonds, right? Their 10-year bonds. And then the bank, or this is why the Fed came in and basically inflated the price of their bonds by giving them full value plus interest in the loan, which is kind of BS, to be honest with you. And then, floated them what they needed. And so now they have the coverage that they needed. I think they borrowed like 11.9 or something like that was the amount borrowed. And that should cover them through what they need. So again, we'll go back to the numbers. 20 billion. Let's just, I know it wasn't 20 billion, but we'll just go to easy numbers. They borrowed 20, they pay back 10 to the depositor. They then have to pay that 20 billion plus interest back to the Fed. They are out 30 billion plus interest. Okay. And you're probably like, what do you mean 30 billion plus interest? Because if anybody comes back for more money, not only have they already lost money on the bonds they sold, if anybody comes back for more money, they don't have the full amount they had in those bonds. They already sold a bunch off. That means that later on, even when those bonds mature and they're able to get them 10 years later, they're out of that money for 10 years. That means for the next 10 years, they're 30 billion down until they're able to mature and take those bond assets. Does that make sense?
Yeah, things aren't looking good for them.
So they're taking on basically more debt in the short to midterm to try to survive. That's essentially what's happening. This is not a QE, it's a QT. It's actually debt for the bank. The bank has to pay the Fed back and the bank has to pay the depositor back. That's double debt. I hope everybody kind of understood the math there, but you know, this is debt. It's not QE. QE is you don't have to pay it back, guys. Like that's free flowing money that can move wherever and you don't have to pay it back.
It sounds like they're just gonna fail anyway after the year.
I could see that happening. I really could. I think this was a float, not to save the bank, but to save the depositors. Does that make sense? I think they get liquidated either way. But again, it all just comes down to depositors. I think there were friends, you know, that could have been in the bank. And I think that's what happened there. Well, the thing is you have to question, are they going to actually be able to pay that back? Right? Is that logical under the current economic conditions? With a high interest rate, you know, environment, can anybody pay back loans right now? Especially at those magnitudes, if you're down that much. I just don't see it happening. The bank is upside down. You got the $20 billion loan, you got the 10 billion to the depositor, and you got all the losses they took on the bonds they already sold at a loss. So you're probably sitting closer to like 35, 40 billion in the red. That's 25% of their overall net worth. They're worth 212 billion. When you're 25% upside down, somebody's going to see that, and then people are going to start running for the hills real quick out of your bank. And that's only going to become worse. At least smart money will, right? Maybe smaller money deposits, they'll be covered by FDIC. So that won't even matter. It doesn't even matter if the bank collapses on the smaller guys. So all the smaller people will be covered under FDIC. So like I had a guy in Spaces the other day, literally sit there trying to argue the fact that he should be covered because he was in one of these, right? He had 18 million in one of these because he had 18 million in his account, and it's normal and logical for people to put 18 million in one account. And like I was like, how much does FDIC cover? 250,000. Okay, that's how much you should have in every account. If you have to make 100 accounts, make 100 accounts, or invest your money, or put it somewhere where it's not exposed to banks. Like it's just stupid to even have that kind of ledger. Well, what about payroll? Okay, payroll. So you could do the same thing. You can have multiple bank accounts, all go back to the same payroll. I know it sounds like a pain. I know some of you probably are business owners and stuff like that. And you're probably like, well, that sounds stupid. Look, I agree, but you know the rules are the rules. It's FDIC covers 250,000. Like if you want to make sure 100% that your money is covered, you need to stay within that range. Otherwise, you are gambling with your money again. All right.
Interesting.
Yeah, go ahead.
All these online banks, not like the traditional banks, but like you've heard of like Aspiration, all of them, they're actually covering up to 1.5 million because they're distributing your money across multiple other banks to give you to get you more insurance, which is interesting.
Oh, that's kind of cool though.
Yeah, I've been getting a bunch of emails I have like all these little small online savings accounts, and I've been getting emails from all of them saying your money's insured up to 1.5.
Yeah,
So
I mean
1.2 because they're distributing the money across multiple bank accounts for you.
There you go. They're doing it for you then. They're already spreading it out, probably making a decent amount on your money, but
I'm
at the end of the day, you're still safe.
Yeah.
That's all that matters, right? At the end of the day. So and I'm again, it's just me dropping knowledge to you guys. I know again, it's like, well, you know, that sounds ridiculous. Look, there's a lot of things in the world that are ridiculous. I can agree with you on that. But it doesn't mean we shouldn't follow what's out there because, you know, in a worst case scenario, like what happened with this bank, that could happen to you. Keep that in mind. I think he was just talking about some online ones. I don't know. Maybe just if you had a name of that. I
Yeah,
think some
yeah,
people-
yeah. So one of them is Betterment is one of them. Aspiration Bank was another one. Ally might be doing it. I'm not sure. Sorry, my son's running around.
You're good. You're good. Yeah, no worries.
Yeah, Aspiration, because there was this list I actually saw. It said like 10 banks that are having similar issues to what Silicon Valley Bank, and Aspiration was on that list. So I mean, Ally, not Aspiration.
Yeah, so there's some ideas, guys. You can definitely do some research into different ones too on top of that. So
Yeah, here, I'll post in the chat what Betterment sent me. Hold on.
Yeah. I mean, what I'm trying to build here is a really good space for everybody. That's why I offer for free and stuff like that. I don't offer anything paid, nothing paid. If anybody DMs you for money, it's not me. Everything I offer here is
I
for
just put it
free.
in the chat, guys, so you can read it.
And you know, if other people have other things to offer, more than welcome. You know, you can throw it in Discord, throw it in chats, whatever you want. Like I'm more than willing to look at this stuff.
Like this afternoon?
But let's move into the chart a little bit. So one thing that I wanted to kind of point out, and again, we've discussed this before, guys. Like it's a big part of my discussion. Is that bodies over wicks, right? We've talked about this many times, and different traders trade different ways. I understand. Look, if you trade wicks, you trade wicks. Again, my trading style, my trading pattern, my trading understanding, my chart understanding is bodies is the finalized price. It's basically where bulls and bears agree on price, right? And they take their positions from there. So you got the high all the way up to here and the low all the way down to here. But the only price that matters to me is between the low body and the high body. I don't care how much they push price up, just like I don't care how much they push price down, right? I don't care about how much they push price down because the agreed upon price was here. This was the zone, right? And then we get a lower agreed upon price, and then we get a higher agreed upon price. And the minute we get a higher agreed upon price, the market starts to shift the other direction. Now, one thing I want you guys to understand is that when you take the lows across, Bitcoin rode the lows, started to break them, fell below them, came back up, retested perfectly, hit the lower zone, and is moving back towards that low again. What do you think this is considered when Bitcoin hits this? What is this considered for those of you who've been here?
It broke trend.
It broke trend, but what is it trying to do right now against this trend? Well, we don't know if it's bearish yet, right?
Just testing it.
It's trying to retest the trend. We don't know if it's bearish yet. I can agree with you on that. I like that. That's one thing I want people to understand. I'm not going to take a position on bearish or bullish until I see the test. But I can tell you when you're under resistance, which is what I would consider this, right? I would consider this a resistance zone. When you're under resistance, resistance is heavy. It's strong. So I'm expecting a retest of resistance, and then we'll see, do they go ahead and take all that liquidity back? That's the question. So I'm going to keep watching the zone and see how this plays out. What I would really like to see here to confirm this even more for me is I'd like to see them pull back and try and build back up, right? If they try to build back up, they might actually get through. But if they pull back and break this bear flag that's currently forming, I expect they're going to drop, bounce, and come down pretty far. Now, does all this happen in one move? No, it could definitely be like boom, 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 all the way down, right? Now, you're probably like, no way. There's no way. We already put the bottoms in, yada, yada. Look, I get the Bulls case, right? Bottoms up. I get that. That's perfectly acceptable with me again. I want to take a neutral stance, but I want you to understand the potential of where we are versus where I think we can go. And this is due to a few lines. We have the long-term floor trend that we are currently coming up to retest. We have the horizontal resistance trend. Look, test, break. Long-term horizontal trend lining up with the bear trend or bull trend. Sorry. This is the bull trend if you're above, bear trend if you're under. So lining up with the bull trend. And then we've got the falling bullish channel lining up in the same zone. Do I have enough confirmations in here to think that this could be a strong resistance? Or does anybody feel that I'm wrong?
I feel like you have 3, right?
I have 3. So I've taken multiple approaches on this position to try and find a bullish case in this zone for a breakout. I took the horizontal. I took the long-term macro. And then I took the bullish, by the way, I'm calling bullish bull flag of the falling flag right here. And I think this is a resistance. Now, granted, these things break out. It's just a matter of when do they break out? Does it break out here? Does it come all the way back and break out here? Where does it break out? Nobody knows. We just know it exists, right? And you're probably like, well, where are you getting your highs and your lows from? Look, body lows, multiple tests. So I've lined it up with the bottom, right? I've lined it up with the bottom and your highs, right? So, and now highs are not adjusted by angle. I angled it based off the lows. I basically brought the highs down to the position, right? So if we're looking at body, and again, we go into body, yes, I can get a little bit closer if we want to there. Body. Look, all these bounces, boom, retest with a wick, roll back up. When you look at body highs and body lows, do we have enough confirmations in that area? This for me is the make or break, right? Either Bitcoin, either it does this and blasts out and then comes back and retests and moves, or it comes up and hits and hits and hits and hits and then starts to do this and roll back over. So I've given you both scenarios here. This is me taking both sides of the argument. Now, if you're in the camp of this, I still think you're on the wrong side of the trade to buy here. Why do you think I think you're on the wrong side of the trade to buy here?
Should wait for the retest or
No, you're right. Always wait for the retest, the confirmation. The market's not going to go like this, guys. It's not. Like, it's illogical and stupid to think that. And I say that with the utmost respect for all of you. And you're probably like, well, why? Why did it over here? What happened here?
Bitcoin was
What?
still really young back then in the halving.
The halving happened here. Look, halving, take off. This has been a regular thing for cycles. When's the next halving?
2024, I think, somewhere in that range.
How many days
Like
does it say
April or
before the
May,
next
right?
halving?
10, is that 1040? So what's that? Oh, that's almost more. That's like 3 years away.
No. So it says minus 1040, 16 hours, 46 minutes, yada, yada.
It's
So
like 200 and something days.
yeah, Yep. So no, actually it's 400 something days. So if we take this across,
What's that 1040 on your screen?
I don't know why it reads that way. I think this is actually
Oh,
hours,
okay.
but yeah, it's kind of dumb.
Oh,
But,
okay.
but you
Yeah,
can
so it's
basically,
like 2024, right?
yeah. So we've
April,
got
May, yeah.
420 days before the halving even starts. Why are people talking about 150K?
To get people to buy in so they can short on them, probably.
Because they want
Extra
followers.
liquidity.
And it's
Yeah.
completely,
It's
I'm
noise.
try not to be too harsh, but it really disgusts me that people do that kind of stuff, man. It really does. Because you're getting people to buy positions that are just not logical for long-term investors. And I don't even think it's exit liquidity, guys. I think some of these influencers just know it's what you want to hear. That's just it at the end of the day. They know it's what you want to hear.
Gets
And
clicks
believe
on
me,
YouTube.
It gets clicks, it gets attention. And believe, look, at one point in trading, I was in that camp. I was like, up only, nothing ever changes, yada, 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 so on and so forth. I went through 2000. I went through 2008. I'm going through 2023 and 2022. And those same people that are saying up only right now were telling me up only all through 2022, getting people destroyed. While I was telling you guys down on. Just think about that. Think about it on a deeper level. Go back to their 2022 feeds. Look at their posts. Illogical, completely illogical. So with that being said, basically what I'm seeing is, again, what do we have happen here? Anybody?
Accumulation into distribution.
Accumulation, right? And what happened here? And don't tell me COVID. Don't tell me COVID. What happened here?
Distribution.
Distribution. You gotta get the narratives out of your heads, guys. Like COVID, it could be COVID, it could be a bank collapse, it could be, a meteor came down and took out New York City. Like anything could happen. They're just narratives. Get them out of your head. Price moves well ahead of any type of BS. And I call it BS. It's not saying the event didn't happen. I'm saying that money already knows. Not only does money already know, money already has intentions here. What's the money's intention here?
The dump.
Now, I'd say dump's a little bit harsh, but I would go more with
Go down.
nobody's
yeah.
taking profit. I'll go ahead and sell into them.
Yeah.
And that's what the market does. And I say the market, you're probably like, well, is that all retail? No, retail is the ones buying the push, right? They're buying the push and they're buying the pull. Because retail does all this, right? You know what smart money does? This is what smart money does. Push, retail, push from smart money, retail, push from smart money, retail, smart money, retail, smart money, retail, smart money. So what happened in this whole scenario over here? Retail got baited. They got baited into the push until they got pulled.
Smart money sold on top of you.
Yeah, it's basically, well, they created the feeding frenzy and retail kept buying it. Does that make sense? This is what I talked about in one of the spaces I was in, and I was basically like, the market conditions people. Conditioning is a form of manipulation, right? It conditions you to get used to something, which is the only up thesis, right? The super cycles, all these other BS narratives that came out. It conditions you to think those are real, only to keep you in the game until the game ends. Now, this doesn't mean markets end. It just means that you made no profit. They did. Because once retail starts getting back to these zones, what's retail doing? What are they doing once they start getting back down to this one? Retail flips from long to what?
Or
It flips from long to short. And then what happens with big money?
They buy at the bottom.
They buy it right back up. And then where's retail buying again?
Midway through, yeah.
Stop. Premium.
And then at the top there. Yeah.
These are your retail. This is your FOMO, right? They started the feeding frenzy over here. They took profit. Then they pushed the feeding frenzy up. They took profit. Then they flipped it back up. Then they took profit. Then they continued to push down. And now what are they doing? They're pushing the feeding frenzy back up. So do you think we're going to go this way, or you think we're going to go this way? Doesn't mean we have to come down and create new lows. By the way,
I think that.
we have to understand the moves. We have to understand what the market is trying to do to us. What is the market's intention? Not only is the market's intention, the market is not bullish like people think. It's not. And you may be like, well, price says different. Yeah, I agree. Price is manipulative. That's what it does. Price gets you to buy. The market is looking for exits on all ends. The market's panicking banks. The market is panicking the market. I can show you this in the SPY. We'll talk about the SPY in a minute. Now, one thing I want to point out, and I know some of you are in crypto, some of you may praise crypto and love crypto and all these other things, and I use Bitcoin because it's a very manipulative type of coin, right? And I say manipulative because like this is big money doesn't move like this, guys. It doesn't. If big money wants in, they trickle. They trickle. When volume is at its lowest, big money, big money, big money, big money, big money, big money, big money. Because who's selling here? Retail, because they're expecting lower lows. And then what happens? Well, the market sees a solid support and traders start to step into. And what happens? We break the zone. Look at that. We break the zone. Retail FOMO. Retail sell. Market maker buy. Retail FOMO. Retail sell. Market maker buy. Retail FOMO. Retail sell. Right? Market maker buy. Retail FOMO. Buy, FOMO, buy, FOMO, and reversal. You have to understand the move. So, with that being said, how bullish are you guys right now? Are you super bulls? Are you bears? You don't have to answer that. That's more of an internal question. But you have to understand where we're at in the chart. Right? That's really the reality of it. I'm not telling you guys to follow me to be a bear. I'm not telling you to follow me to be a bull. I'm telling you to follow price. Price will tell you everything you need to know. That's it. Just follow price. And it doesn't mean be scared either. Like you guys could take positions. Like I just think right now is not the most logical time to do that. Unless we see some kind of move, which I just showed you, which is another potential, where they pull back and hold support above here, right? And if they hold support above there, you might get one more push. But this is just going to be a play of the high. That's it. It's going to be a play of the high. And then, it's going to come down and retest this, maybe bounce back up again, then break, then come back up, retest again. And it's going to start working its way back down. If that happens. If that happens, right? This is the bear case. That's the way I would see the bear playing out. Now, one thing I want you to understand too is something I was looking at on the higher time frame, so monthly. And I was looking at what we call the OBV, right? So this is basically your volume indicator. What's the highest position where volume typically sits on Bitcoin? On average, we'll say on average. Well, I'd say it's right here on this line, right? Bounce, 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 bounce. We got solid positions over here, and we have a lot of play over here. We're basically getting back into that zone of what, I would say maximum volume. As in volume is peaking. So price is getting very close to topping based on volume. Not only are we high on the volume, we're just getting to the 50, right? Just getting to it. The most deflected point on the RSI is the 50. And I really think that's what's pressuring Bitcoin right now in this 27K zone. As you can see, we're sitting now at 27.1. They keep like buyers are buying, but buyers are only buying from here to here. So why aren't we going higher? What's going on here? Why aren't we going higher? Anybody?
Why?
Yeah, why? I would say we're not going higher because we're getting sold into.
We're getting what? Sorry, I didn't hear that.
Sold into at these heights.
Oh, okay.
When you take Bitcoin at the high here, we have no divs. So I want to be very clear on that. There's no bearish divs yet, but we have zones of liquidity where we're currently sitting, right? Anytime you're above the 70, you are overbought. This means the market recognizes that you are overbought, and maybe you don't, maybe the rest of retail doesn't, but somebody who's been pushing liquidity knows that you're overbought, right? This is the macro distribution zone / micro distribution zone. When you end up in this overbought scenario, when you look at daily volume, it tells a different story from monthly, right? Daily volume is lowering. It's getting less. So daily volume is declining while price is at peak highs. This is a micro distribution. Exactly. So from a daily perspective, this is a micro distribution that will more than likely fall back to previous support. And again, we want to be clear about where that support lies. And it's going to be right in these zones, right in here, right? That's where that support would lie. And you can see right here, I pretty much tapped it on the nose. So if price continues down here and it does not break for the bottom of the channel, my expectations are we don't get to the high end of the channel. We come up and touch this 3-point resistance, right? Probably. And then once we touch this 3-point resistance, we then pull away. And then we retest the low by breaking it and then hitting the bottom of the channel, then retesting the high end of the bull channel. Again, this is the bullish flag, right? Dropping down, maybe retesting again, and then dropping down further. And this is how you get the distribution going, because nobody believes that they're being distributed to until they end up right back at the bottom. Why? Because every bounce is a dip opportunity, right? Every bounce is a dip opportunity. But if you're a dip buyer, you're going to get wrecked if this thing starts coming to fruition. I can tell you, and I think Erica and Billy and all you guys were here. We had this same discussion right here. Same exact discussion. Everybody's telling me how it's going to break out and go back up for another leg. What happened here?
Dropped. Start buying up that liquidity on the longs.
Yeah, they pretty much just shut the whole rally down right in here. It was done. And I can tell you, when you look at a push to pull situation, I want to point something out to you. When we're at peak formation highs, what's our percentage there? What's this percentage? Anybody?
120.
120, right? 120. 120 to the high. What's that percentage?
130.
We'll go with 130, right? Let's go with this one right here. Different. 100% different. 331, right? The reason I say this is different because this is a lot less liquidity. But let's go here to here. What are we at? 200? So let's go and compare our peak highs to our current move. What are we at right there? 80, right? So if we get up to here, we will be very close to 100. Now, some of you may be like, well, that means we have so much extra room. We would, yes, if we weren't sitting between two zones. You have to understand there's two, and this is a discussion we had a while back, right? There are two zones where we're sitting. There's what I would consider the lower zone, right? And that lower zone comes all the way down to here, as you can see. And then there's what I would consider the higher zone. And that higher zone goes all the way across to here. So can you see the move playing out? Do you guys see what's actually going on here? Here, let me clear all this. I'll just put a line right here. What do you see?
It broke through that
Kinda-
resistance.
What's it doing?
Kind of looks like
It's
the
trying
same
to
thing.
retest it.
Trying to retest it. And it looks
That
like
is-
the same thing, doesn't it? It's pretty crazy.
Yeah.
You guys want to see something really crazy? And this is something that comes in time when you start paying attention. All right. When you start paying attention to charts and you start looking at them, this is something that comes in time. So if I were to take this and then I were to go ahead and let me click it. And I were to, where is it at? Flip that. Huh. What does that tell me?
It's not working. Before you just drag it back.
What does that tell me?
See?
I mean, it's an interesting theory at the end of the day, right? It is an interesting theory, but I want you to understand the risk. That's all I'm saying. I've looked at this move so many different ways, guys. So many different ways, trying to get a bullish narrative. What is the only bullish case in this move? Did anybody identify it? Nobody?
Broke 25.
What's up?
Broke 25. Okay.
Not yet. Nope. Yeah, it's broke 25, but that's not the one I'm looking for. What is it? Nope, not even a double bottom. What is it? It doesn't even have to come back down and retest low. Like, what would be the most bullish case in this scenario?
The interest rate.
Nope, not. It has nothing to do with macro price. All right, I'll tell you. The most bullish scenario that could happen is Bitcoin breaks through the zone, retests this low, comes back down, finds support, and that I would take as bullish. Because now we're playing up here. And if we're playing up here, what's the high and what's the low? You see how games played? And yeah, I could support from this position. The bottom is in. I could support that. This would be a trend switch. It would be an OB, right? Or not OB, but a BMS, a break in market structure. Because it's basically this is where market structure was broken, and this is where market structure was recaptured. And once market structure is recaptured, typically it tends to hold.
Hypothetically, would S&P follow?
I would think S&P would be looking to follow, yes. In which case we could be avoiding some kind of detrimental situation.
Or kicking the can?
Right. So I want you guys to know I have a strategy. I have a theory if for a bull case. But I need to see that play out. And we're pretty far from that. We are pretty far from that. And again, if Bitcoin were to break through the zone and do this, that means nothing to me. Why does that mean nothing to me?
If it stays above that former low,
It still hasn't gotten through it. If
No,
price is true, it will force through. And not by small margins, by big margins. They will bust through this thing like crazy. Everybody will buy up here and then they'll come all the way back. That would be a bullish case. Do I have to catch the breakout? No, I don't. You guys got to get out of that breakout mentality. Take the retest. Take the retest. You don't need to buy the erect candle. That is retail mentality at its finest. I want you guys
But how
to
do you-
really. Oh, go. Sorry, Daddy, I didn't mean to mute you. Go ahead.
how do you know once it breaks through and if it goes back and it retests that former low? How do you know it's not going to go back past that former low again? Like, what does it do to make you say, okay, it's gone up and it's retested? It's not gonna go below where it retested.
Two things. So if price got back up here, I would more than likely expect that the 200 weekly moving average would also be following. Right. And we've talked about this many, many, many times. I said either 200 becomes extreme support or extreme resistance, and it has proved itself time and time again. Right. So more than likely, if we're sitting up here playing the low, the 200's already reached where we're at and will bounce once the 200 meets with price. So what I'd be looking for is I'd be looking for this thing to waddle. And then once they came back on the retrace, everybody's scared, everybody's selling. And then you got institutions buying the bottom here, right? And then once institutions are buying in the bottom, then price can't go any lower because they're continuing to buy the lows. And then retail has to buy up.
Got you.
That's
So
the only direction it can go from there. This is a major position in the market right here, right? Now, granted, I want to kind of point out the similar scenario over here. Look, once they came through and they breached the high here, the market ran all the way back up, continued to hold the high. Now, this right here was a massive event, right? So it pulled us back under. Now, this could always happen. So what that means is, yes, they could technically pull back into the zone, but more than likely it won't be in the way you're thinking. It won't be lower. It won't be to the same zone. It'll be something like a bullish move, right? So it'll be a pull in and a pull out very fast that you'll more than likely probably miss because you'll be fearful to take it. Price will be shifting away. You'll be like, oh, it's going to come back down and retest the low. Price will shift away here, and now it's already gone. Hence what happened here. And that, again, moves into the halving, right? So we always want to pay attention to halving. That's something that I'm consistently trying to tell you guys is like, pay attention to halving. So if you're looking at it from a halving perspective, that's your halving date. And keep in mind, I through and through can catch up with the market. And what I mean by that, and maybe you guys can't, maybe you can't, maybe you're scared, you want to be in, you don't want to miss the move. yada, 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 right? If that's the case, it's fine. But I can catch up with the market through other markets. And I'll show you guys kind of my theory with that. You could always play catch up if you get behind. If you learn to trade. If you don't learn to trade, it's very difficult to catch up on your position. Granted, you can get in. Upside will be great, but it's very difficult to catch up on your position if you don't know how to trade. So what I mean by that is I just look at, cyclicals, and I look at, specific stocks, specific cryptos, and so on and so forth. What is the percentage gain right now on Bitcoin? Roughly. Well, it's a little bit higher, but what are you guys seeing there for percentage gain?
79.51.
79.51. All right. Let's go into where are we at? Yep, this is the one. Sorry if there's any background noise, guys. There we go. Who did better?
Second guy. I don't know what that is, but the second one.
Anybody know what that is? Nobody?
Was it he?
NVIDIA,
You said what?
the NVIDIA, the computer graphic cards.
Yeah, stock company, right? So when people tell you, hey, Bitcoin, look, there's always a way to play catch up. Ignore noise, look at assets as a whole. Okay. Look over here. Facebook. Now, I'm not saying this thing ain't going to get crushed. Don't get me wrong. Who did better, Bitcoin or this one?
Facebook.
Now, this is just me being an asset trader, guys. And
Is that within the same time?
Yeah, these are literally the same. From Bitcoin, basically from Bitcoin's bottom to Bitcoin's high. That's the way you have to look at it. So from bottom to high and Facebook's bottom to high, every single stock, just about blue chip, by the way, with billions of dollars to move them, right? Bitcoin has significantly less liquidity than all these, have moved at higher percentages. Oh, much higher percentages than crypto.
So in that same time frame from the last time Bitcoin was down, like from the last bull run, basically.
No, I'm talking about as far as recovery. So what I'm trying to point out here, I'll tell you the biggest point I'm trying to point out. The biggest point I'm trying to point out is there's always a way to catch up to the market if you get behind. Oh, sorry. So if you look here, we've got low to high, right? We got 145%. Bitcoin has moved 80%. 80%.
Yeah, I got you.
Now, granted, different time frames, so on and so forth. More time on the stocks, less time on Bitcoin, right? In percentage gain, definitely less time in percentage gain. But if you're playing the patience game, you're playing long on anything, you're jumping in anything, just pay attention to the moves, right? It's not even about blue chips, because I think all these are just trash, right? I think there's some investable ones, but like I think a lot of these, there's just no gains to be had. But you could always get into low caps and stuff like that when it comes to stocks, catch their lows, pay attention, and catch the rallies off of them. And you can catch up to the market really fast if you maybe miss the bottom. And that's one thing that I'm constantly trying to, trying to voice to you guys, because I feel like there's a lot of panic always I have to be in or I'm going to miss out. You're not going to miss out, guys. 100%. Like you will catch up through one way or another. And this is why I've been purchasing the things I've been purchasing. And I put that, you guys know where my stuff is in the Discord. I put all my purchases and my current buys and so on and so forth. low caps, blue chips, so on and so forth. Sorry, give me a second. Hold on one second, guys. Sorry. Sorry about that, guys. All right, so as we discussed, I'll be uploading. There's always a way to catch up on markets, right? We talked about many things on buying, so on and so forth. So this is Meta, and again, I think we're hitting a hard resist on Meta. Look at Ethereum. Ethereum starting to break out of its resistance zone for sure. I can't see much upside for Ethereum here, guys. I just can't. Like, there's a lot of money sitting in Ethereum and a lot of liquidity, and I gotta respect the lows at the end of the day. Now, if we were to take this like Bitcoin, I would remove all this, and I were to just come across the lows again. I'm gonna try and capture as much as I can. I don't think I can capture that one, but we'll try and take it along there, right? Ethereum looks long from this position. It does. 100% it does. The problem that I'm having is the amount of growth we have here, right? So if we look at Bitcoin from low to high, 22,000%, right? This is slowly degrading pretty rapidly. 4,000%. So we went from 22 to 4,000. So that's what, 1 quarter, right? So if we're expecting 1 quarter again, we might be looking at, maybe 1,000% for growth. So you might see a 10K ETH from a $2,500 asset. Would you be better buying this or better buying Facebook? Or not Facebook, sorry. Any type of altcoin. If you're looking for growth.
Yeah, I
Probably
probably
the
buy
other
that.
altcoin.
Bitcoin and ETH.
You could easily buy any altcoin and outpace Ethereum. You could buy any low cap stock and outpace Ethereum at its growth rate. That's all I'm saying, right? At the end of the day, we had to look at it from the perspective. I mean, to me, look, I won't lie. I was anticipating low positions on Ethereum, guys. 100% was it. I was looking for $300, maybe $600. I kind of think I'm wrong. I do, right? At the end of the day, does it mean it won't happen? Sure, it could happen. And again, I'll be continuing to watch this zone right here because that's where I'm looking. I'd like to see a retest of these lows. But Ethereum has just been not fundamentally, but price-wise, stronger than BTC in my opinion. It's held higher. It's continuing to build, and it looks like it's wanting to build on this trend. And now that it's building on this trend, and I know I'm talking bullish, but I don't buy Ethereum because it's not worth it to me. If I'm going to look for a store of value, it's going to be Bitcoin, which means I'm trying to sustain my money. If I'm going to look for growth, I'm going to look for altcoins. There's no point in buying Ethereum. It might be a breakout move. But again, we talked about it. When you look at percentage growth, 1 quarter of previous, you're going to max out around 10K. That's a 4X. Did anybody talk about 4Xs all through 2021? And I know that sounds absurd if you guys are in here from stocks. I get that. But like when you're talking crypto, hey, you're talking minimum 10. Like, and it sounds obscene, but that's just how the market rolls through bull markets. So growth potential, it's not an asset worth buying. It's just not. Right? Or I guess we could say 5X instead of 17. We'll basically say 2K. So we'll say 5.2. there's so many other assets you can use to grow well. And again, store would be Bitcoin or something like that. But I would highly recommend, not financial advice, but I recommend you guys look at stocks too. Be buying both sides of the aisle. At the end of the day, there's going to be fire sales on both, lots of them, and different sectors are going to bottom at different times. Like everybody keeps chasing tech. Tech is not the only growth thing out there. Like if you look at wealthy people, how they're positioned, they're a lot of them are positioned in consumables, as in like, you know, food, clothing, essentials, which to me is very recessionary. Typically when they start positioning towards food and clothing and stuff like that, they're positioning in a way that is positioning towards necessities. And when you start positioning towards necessities, you're doing that because you're expecting some kind of downspill in the economy, which is another thing that makes me very fearful on purchasing a lot of these assets where they sit at. Now, if we were to look at this from a high zone with Ethereum, I mean, I like how it's rounding out. We've always talked about round tops and round bottoms. You still have a higher move to take to actually take out all the wicks, right? They have 13 days to close above here, and then they will be closing above the technical high, right, of the body, which would be 16.68. But I highly doubt they're going to stay here. Then they might just fall over, come back into this sideways zone. And if they can't sustain this uptrend, they're going to break just like BTC, and this thing's going to look like a waterfall.
Will, can I just ask you a quick question? It's
Yeah.
kind of off topic, but you're talking about stocks. In light of all these bank Silicon Valley and all these places like that, do you think Wealthsimple is a safe place to have your money in?
Is it one of the top 4, top 5?
I don't think so.
Okay, well then
I
there's
don't
your
know
answer.
Yeah.
Unless it's a
Okay.
federally funded bank. Well, technically, no. I'm sorry. I am wrong. So unless you have more than $250,000 in the bank, it's not, right? If you do have more than 250,000, but if you do have less than 250,000, you're perfectly safe in any bank. You are.
Okay, that's good to know. Even whether it's RS, whether it's
Doesn't matter what it is. You got
What-
FDIC coverage. You're good.
okay, thanks.
And I'm not a banker. That's just something everybody should know. FDIC covers up to $250,000. You can get any bank and ask them.
Yeah, that's what I've heard. I've heard something along those lines, but my thinking is maybe since it's a newer bank, I don't know how.
As long as it's accredited, that's all it is.
Yeah, it is. It's a bank.
Yep. If it's accredited as a bank and then yeah, it's covered. Every
Okay,
bank
very
is
good.
required to have FDIC insurance to be a bank.
Whether it's 401k or I can't remember what you guys call TFSA, but it doesn't matter what kind of account it's in, right?
Yeah, the account doesn't matter. Like a bank's a bank at the end of the day, right?
Okay,
So
got you.
yeah, but if you have like 400,000 in assets, that's different than having
Right.
400,000 in the bank.
All right, thanks.
Yeah, no worries. Again, we talked about this. I would expect the breakout. So for me, if you look here, this is kind of like, this is where everybody was long on Bitcoin, right? And it looked like it was going to come back up and break out. And I feel like, and I say feel, I hate that word, by the way, because I think it's just BS when it comes to trading. Or it looks like we're kind of in that same zone here with Ethereum, where Ethereum's still up here and Bitcoin, already fell over. And when you look at it from that perspective, it's almost like Ethereum's lagging behind Bitcoin. And if that ends up happening, you are looking at Ethereum just full on flushing at some point, consolidating, and then pulling back out. So, any one of these moves could happen. And that would also adjust the lower line, which would be screwed, because that means that Ethereum's going to do exactly what Bitcoin's doing, come back up, retest the high, and fall back under, which is what I think Bitcoin's going to do, right? From where it sits right now. That's just my perspective, again, on the market based on the lows and stuff like that. And, the trend. It's just that it's that retest of the high, those cross points, and then hit and reject. BNB, kind of a similar situation over here. It's kind of retesting the high, pretending to break out. The higher zone here on BNB is all the way up here, right? So like the reality is like BNB could come all the way back up here to 413. It wouldn't even matter because one leg is going to fall back under and continue this downtrend. This is a very bearish formation right here. It's just, you know, it's slowly degrading and, you know, eventually just falls over. Now the trend I'm watching for is the higher level trend, which is this lower area right here. So if Bitcoin were to fall over here, you're looking at, you know, $60 to $100 Bitcoin or BNB, sorry, $60 to $100 BNB if that ends up happening. If you like exchange coins, honestly, I'm gonna avoid exchange coins this cycle. I already thought about it. Yeah, there's money to be made. I'm just gonna use them for, you know, what they're supposed to be used for, and that's trading fees and so on and so forth. But I'm not gonna hold a significant amount of them. Meta, something else I'm eyeballing, but there is no way I'm buying the top of this. Zero. Right? These people got $80, and if this thing can go to 2,000, I don't care. I just won't buy Meta. If it doesn't pull back, I'm not interested. And it's minimum kind of come back and retest this 127. Potentially go lower. We'll see what the weekly and daily show me real quick. See if we got any gaps. All that. Yeah, this looks topped. This looks topped. It could come up and hit that 200 around 231 and then just kind of roll back down. Daily yeah. Oh yeah. Look at this. Look at that. They filled the gap here. And then they created a massive gap to exactly where I was saying it should come back down to, or sorry, it should come down lower now, but right down to the high of the previous gap. I think a lot of people are bidding this gap. And really, I think they're going to come back and fill this gap, right, at minimum. So 146, maybe a bounce back up to refill that gap, something like that. If they stay in formation, right, if they stay bid long, this will be the low 145, and then they'll bounce and they'll refill this gap over here all the way up to like 293. So nothing too crazy, but it could be a good trading opportunity for puts and calls. This is the way I would take it. Probably put it where it's at, call it down here, and then put it up here again. I'd expect it's going to retrace. This would be a crazy call move right here. So long dated. Let's see. Yeah, I mean, this thing could fall over the next couple months, really, to be honest with you. How long was this? Yeah, it's quite a few, like roughly about probably 3-4 months, maybe 2-3 months. This thing falls over. Maybe a put to there and then a call from here. And then I think at the end of the year, like most of the downside, most of the damage stops or slows. So that's really what I'm looking for. I'm looking for a big flush out by end of year, but then I think things kind of slow down and kind of the money stops creating volatility at a certain point. And I think that's what's going to happen towards the end of the year. Still retesting these lows right here. ADA is trying its best to stay above the macro trend here. It's actually pretty good. Maybe it's still sitting at its lows. Maybe this is like the lowest price you're going to get it. I thought they would come lower. To be honest with you, I thought they were going to come back and grab this liquidity over here where they took off. But it looks like they're trying to defend the liquidity. They did this on a couple different stocks. I was looking for price to come down and fill the entire move, and they stopped it midway, right? Just on quite a few different stocks. I got faked out on a couple of these, expecting price to continue down to hit the next liquidity zone, and they just reverse it mid-move and pull it back up. Now it could still happen, right? And come back down and fill that liquidity zone. But we'll see at the end of the day. NVIDIA, I think you are going to get destroyed if you're betting long on NVIDIA. I 100%. I think you are going to get wrecked. This is not. No. Any stock like that's not something that's really, reality. So if we come in here and we look at that, we got our OB high. And basically they came up and just touched it, right? So we got our order block high here. I think all the liquidity has been grabbed. This entire drop has been grabbed. And really, this is a big range zone now for me. So I'm looking for price to sit here and continue to distribute. And if things fundamentally go extremely bad, Nvidia is going to get wrecked, right? Then like they could take this whole move out within a matter of months. So I'm not bullish on Nvidia. I think anybody who has a position should really consider, removing that position. Not financial advice in the least. That looks horrible. Let's open it up real quick. Let's see. Oh, I want to see how Quick was doing. I haven't looked at Quick. Yeah, they haven't really recovered any of that price action. That's pretty crazy, man. I got in, I think at like $25 or something like that. This ain't pumped. Oh, let's see. I'm gonna see crypto total 2. Excluding BTC. So altcoins are still kind of in their range. They haven't really moved out. They're just kind of sitting here distributing and pumping. Some nice sideways action. I'd like to see a stair step down one more time, really, to be honest with you. This is kind of like, this is what I call the stair step pattern, right? And I'd like to see it do it kind of one more time. That would make me feel more confident. It's not about price, it's just about patterns at the end of the day. But that pattern would make me feel a lot more confident with that move. Total altogether. Let's see if they breached any highs. They jumped high up here. Don't get me wrong. Like the total is way out here, and a lot of people are like, yeah, it's gonna break out. Look, it's gonna break out. The reality is like they still got to get above some zones here. So we're looking at this from that perspective. We're probably looking close to like right there. That might be where they test next. It looks like they're trying to retest these lows. That's a perfect touch. Right over here, where liquidity flipped. And they've came back up, retested it. Now the question is, do they continue to hold above the previous body resistances? Or, do they fall back down before the month's end in 13 days? And if they fall back down, this is going to be a big liquidity grab, because keep in mind, they did this before where they came all the way up and that ended up coming down pretty far, right? And if they do that again here, where they go all the way up, they could be forming a lower low. Because if you look here, this is a lower low than here. And that means that they would be forming a lower low here. And that would support my thesis of Bitcoin going to the lows again, if not lower, right? That would be a pretty nasty move. But if that were to happen, let's see, we might get a bullish div here, right? So we get a higher low here. Maybe something like that. Price then moves up, moves back down, but it forms the higher low. Even though we get the lower low here, that creates a bullish div, and that would define a bottom for me for total cap, right? This is the entire crypto cap altogether. If we could see something like that, that would be very bullish for me. I'd be all in on that position. If I could see price holding at a higher strength value to volume value or total cap value. Tesla, the dirtiest of all of them. Let's see. Tested an amazing, retested a high. Might consolidate here for a while. It looks like it wants to. Yeah, I mean, this is a hard call. I wanted to see them fill this gap at 145. I think that's definitely still possible. I think anybody not bidding that is, sadly going to be sadly mistaken personally. But we got a big old gap right here at 145, and I think they're going to come back for that. I think this is just simply a rally out of a liquidity zone. That's why I have it marked out, right? Big old liquidity zone. And, we'll end up kind of seeing these prices later. So maybe some puts later dated, but this is kind of that zone where you want to be looking for that. Roku, I haven't looked at this one in a while. Oh yeah, that looks bad. That looks really bad. So daily wise, we are sitting under the 200 daily, right? We fell way far below, came up, retest, 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 retest. It just a lot of rejections, I don't like to see that many rejections. Really, we're looking for a pullback here, maybe back to $50, and then maybe a shift out, or maybe back to the lows. We'll see. Gold, something else I usually look at. I haven't looked at in a while. Oh, let's see. Yeah, look at that. And I'm telling you guys, look, gold takes significantly more money than Bitcoin to move. All right. And we are seeing a flood in the gold. Yeah, we can look at the second. Let's see. Yeah, we'll look at dominance too. Yeah, gold is doing some crazy stuff.
Is now still a good time to get into gold?
Heck no, I don't think so. So that's your high that you're sitting at. They might come back, retrace, and jump back up again. The problem that I'm seeing with gold is like my overall view is that gold is going to be bearish. Like a lot of people probably don't think it is, right? So here's kind of my thesis with gold. I think this is a buy the rumor, sell the news. And I think gold is bidding long, right? Which it has been. We talked about this for a while. I don't know if Ellie's in here, but this is a discussion we had many, many times. Had the bull flag forming out perfectly. Price broke out of the bull flag, came back, pretended to retest, didn't come all the way down to retest, shifted away fast, right? When you see these fast shiftaways, it's more of a liquidity grab than anything, right? They're trying to entice people in so they could sell out. So I really hate when you don't get a retest, guys. It's more of a false signal than a real signal. That's the thing you got to understand. Like if price doesn't retest the channel when you get a bull flag like that, more than likely price is looking to grab liquidity no matter how high it goes and come back lower than where it started. So I didn't like the shift away here. I didn't like that they wouldn't allow price to come back and retest. And fake a lot of traders out into pushing price to the channel lower. They instantly came up and bought it up, and this is a panic buy. That's the way I see it. I see it as a panic buy. Now I want you to understand, with gold, there's still upside, but like I wouldn't be playing this long where it sits. If you were playing since the falling bullish channel, sure, you can stay in the trade, and I would just keep moving my stops up, but. If you're looking at this from this perspective, we got a 1 test, we got a 2 test, and I think if people are expecting a breakout here on a 3rd retest, I think it's gonna be a 3 and a reject, right? This is like a big W that for me is gonna turn into a M, right, and drop back down. Because if a W is gonna break out, usually this side is already where it was gonna break. And the W goes like this, and then it comes back up and retests the high, right? And a lot of people are seeing the W formation. They're thinking it's a breakout. I don't think it is. I just don't. I think this is more like an M formation on a higher time frame. And really, this whole move is just noise. Look at the monthly candles on gold. Like that is freaking ridiculous. And a lot of people are saying, they're saying it's bullish. And look, I'm not 100% in the camp that it can't be, but I am in the camp that, I think it's overbought significantly. We have the downtrend. We have the clear downtrend on RSI. Like everything to me, there's no bullish divs. There's nothing indicating some kind of fake out move that it is going to break out. And I think that this thing is going to get wrecked. When we look at it from the highs here, let's say it retests this angled high here. It's still not going to go up that much more, right? I'm not sure what the call ratio is on this, but like if you were to come up and retest this, around 21,000, or was that 21,000, or where I think it's going to go 2072. I think this is a full-on rejection. I think we come all the way back down. I think this is just over speculation, too much hype into gold, too much panic. And this is what I mean by the markets panicking, right? I think by the time gold tops, we'll probably see a lot of flush outs in the market. And then you'll see that rotation from gold back into the market to kind of float the market, hold the market up. So I think it's just asset rotation at the end of the day. I think they're going to come up, retest the high, come back down to the low, come all the way back to like 1354. This is the major consolidation zone, right? This is the hype zone up here. This is the big distribution hype zone. And this is what I mean. Like when you guys are looking at charts, you have to look at it from the perspective. Where are they trading? Where were they trading? So if we shifted, then yes, we can be bullish, but the bullish thesis is not here. The bullish thesis is the pullback to above previous liquidity to shift out. That's the bullish thesis. Again, in my perspective, the way I'm seeing gold. So that's the way I'm going to play this. I think gold's going to get wrecked. And it could be mid to long. Now, again, I said mid long here, but it's just on a trade. It's not on a permanent hold. This is a bid long position that's going to turn into a short position, I think, relatively quickly, right? The sell-off, I think, is going to be pretty big. It's going to be something like this on gold up here. You got to watch the consolidation highs. Look, again, over here, same thing, consolidation high, price comes back, lands on top of previous liquidity, right? Consolidation low was here. Where did price come back to? Boom, right on top of it, right? Shifted out, moved up, got a little bit above previous high. I'm looking for a price to come back and shift right on top of previous liquidity again. Does that make sense? Everybody's good with that thesis? If you disagree,
good.
feel free. But that's my thoughts on gold. Oh, let's see. DXY. Again, we've talked about this. I don't think DXY is bearish at all. I think people are overreacting on DXY. We are holding. We are definitely look at the buy up here. Look at the buy up here. They faked people out by breaking below, but we talked about bodies are most important. So if we're looking at bodies, this is technically a higher low. Right? We're just starting to build. And I think the dollar is gonna break out. I do. I definitely think that. And what does that tell me? What does that signal to me? It signals me that I should be watching for assets dumping. That's my biggest concern in this zone. All right. Let's see what else we want to look at here. Oh, VIX. Let's look at the VIX real quick. It's another topic of argument for a lot of people. Does that look like a bearish VIX to anybody? Does that candle look very bearish? We'll start with this candle. I mean, to me, it looks like VIX was dropping, and now it looks like we're starting to rapidly move back up. Does anybody know what happens to the market, or at least the S&P, when the VIX is starting to ramp?
Dumps.
It dumps. The VIX works in opposition of the S&P. It is the volatility measurement for the S&P. Now I'm going to show you a 3-year move for the VIX. Actually, it's longer than that. Sorry. 18, right? 17 is where it flipped. 18, 19, 20, 21, 22, 23. What do we see here? What is this? What is this line? What direction is that going? Up, right? So what does that indicate the VIX has been doing for all these years?
It's consolidating on the low.
Well, it's consolidating now on the low, but what has this been doing here?
Heading a bottom trend.
Yeah, but this is an up bottom trend, right? So the VIX has slowly been building
Higher low.
to the upside with higher lows. Understand the move. Typically, when the VIX starts to get lower to this lower zone, what starts to happen?
Something to get strength.
Look at that. What do you think happened on each one of these situations right here?
People got rich buying cheap assets.
A lot of them did. What happened? Where was the S&P when this one happened? Do you want me to show you where the S&P was when that one happened?
Yes.
The S&P was here when that one happened. Anybody see that?
22 too.
Does that look bullish to you? It should, if you're a smart trader.
Yep.
Everybody looks up here for bullish. They don't look down here. That looks very bullish for me. You've got a lower low. An indication for a market turnaround. Now, what happened here? Look at that. That's December 2018. Let's go back to the VIX. Where was that? December of 2018. See that? Did the VIX make a big move there on December of 2018
Yeah.
and just start ripping? See that big old wick and it just pulls back and then just rips again? What does it look like this candle's doing right now?
I was about to rip.
Same thing.
It looks like it's priming, right? Now, we don't know exactly when that would occur. We don't know that. But we know that the market looks like it's starting to shift back up in volatility. You don't want to see the VIX hold this line if you are bullish on the market. You just don't. Now, where was the market the best? What was the strongest market? What year in this?
$21.
21. Look at 21, guys. Look at that. 21, right? 21. What was the VIX doing in 21?
Sub 20.
It was falling to its trend. What did the VIX have to do before 21 occurred?
At the peak.
It had to peak before it could run. History doesn't repeat, but it rhymes. That's the one thing you should always remember. Typically, a crash leads into a massive bull run. Do we know when the crash will occur? No. We just wait for it to happen, then take advantage. And you'll be like, well, what if it never comes? Whenever it comes. Yeah, that could happen. 100% that could happen. But in a QT environment, a quantitative tightening, not easing, we are not in an easing environment. And easing is free printed money, 0% borrowing. We do not fall under those conditions. So we're in a quantitative environment. Is it more likely or less likely that something like this could occur? Again, we're just playing a game of odds.
More likely.
It's more likely, right? So if you're playing a game of odds, should you bet on the more likely situation or the I hope situation?
More likely.
The latter. Or
Yeah.
the first.
Yeah, you should bet on the numbers game, as in what one has the higher percentage chance of happening. It doesn't matter if it's 51, doesn't matter if it's 70% chance. If it has the higher percentage chance of happening, don't fight the inevitable. Again, and I say inevitable because I play on the higher odds side of trading. I don't play on the I hope or this or that or Fed pivot or this theory or that theory of this happening and that happened, even there's no proof of any of it. Or we're going to bully the Fed into pivoting. That's not going to happen. Nobody's going to believe the Fed into pivoting. The market can cry as much as it wants. It's going to have to deal with the pain. And I don't say that with pleasure of seeing people lose money. I don't say that at all with that, but that's why I do this specific group for retail, right? Because I want to see everybody succeed. I do that with being able to allow you guys to understand the market from a deeper concept, right? It's much deeper than most people take it. A lot of people take it at face value and just make up weird narratives, really, to be honest with you. Just the weirdest stuff I see on, especially on Twitter, stick a bunch of random words in your hat and pull one out and call it a bullish narrative. That's what I see all over, man. It's just like, dude, none of the data matches up with anything that anybody's saying for bullish narratives. It just doesn't. There's nothing in bullish. There's nothing in the bull's favor, in my opinion, unless, let's say, Bank of America is secured. I will 100% be like, all right, bulls they have a good point there. I will bow down to that. I'll be like, you know what? Bank of America failed. They're bailing them out. I'm on board for bullishness. On board for that. Let's say the Fed default, or not the Fed, but the government defaults on its debt. Hey, all on board. All on board. That's bullish. And now other people be like, oh, that's so bearish. Oh, we're gonna die. Yada yada. Very negative news is positive news. That's all it is at the end of the day. The worst news should be the most bullish news. Because at the end of the day, the dollar's always going to win. It's always going to win. Doesn't matter how much we expect it to fail. Doesn't matter how much we expect this or that or anything else. They'll find a way to print themselves out of it. But the failure comes before the printing. I've expressed this many, many, many times. Failure, then printing. SVB is not failure. It's, let me help a friend. Did anybody come to SI's rescue? Anybody?
Not 8.7.
So if they were scared of banks failing, why didn't they come to SI's rescue? Because they didn't care. Again, it's a pony show. At the end of the day, that's all it is. When I tell you, I think that the SVB bailout was, again, it's not a bailout, it's not a QE situation, but the rescue of SVB was helping a friend. Because if they felt that way, SI would have been saved too. And they're roughly about the same liquidity. Go ahead, Danny.
That
SYK? Yeah, I'll pull up SYK. The verdict to fix is broken during early Q1 2023. Sounds like heirs who were over leveraged. Yeah, look, at the end of the day, you had a clear signal here that price was going to break out, right? Where was that clear signal? What's the high here? What's been the high? 34, right? So you're good, Danny. I'll let you talk in just a second. So the high has been 34. So bears should have stepped out of the way to this trade. Because right after the high of 34 right here in September, and we talked about this in the group, the trend reversal that I saw in BTC. So what happened? Subsequently in October, you're going to get a cool down. Right? You're going to get a cool down. And what happened? The market ran off of that. But now we're going the other way. And we haven't retested the 34 yet. So we don't know if 34 will be resistance, which it could, which means we fall back again and we get another pump in the market, right? But before we get the pump, we're going to get the dump. Right? It's going to follow trend. I just don't like where it sits because you got this 34 zone and you got this rising support, right? When you got a rising support and you got a ceiling, you're looking to typically not break down, but break out. Could it occur here? Sure. Could it occur over here? Sure. Maybe a year later. Maybe I'm wrong on that. But as where the VIX sits right now, the VIX has been oversold based on the two zones, and it's moving back into overbought, right? We're going to get back to that overbought. And the overbought for me is around this 34.50 zone. So once we start getting back up to here, bulls have another case again, based on the VIX specifically. So I can get on board with both sides of the narrative. It's just right now, it looks to be in the bear's court when it comes to the VIX. Does that make sense, Webb? Go ahead, Danny. I'll pull up SYK here real quick.
It's in regards to USDC, kind of a two-part question. Do you think that the way that some of these banks failed that affected USDC and the USDC recovered, that it makes it somewhat stronger, like it already withstood a test? Also, with them diversifying into, I think it was Chinese stable coin. I think it might have been you that posted the link. Do you think that makes them stronger or weaker?
Ultimately, I don't think USDC fails, right? In the end, the problem is like they have to find a better system for banking. They were basically banking through our normal banking systems, through banks that were allowing them to get 24-hour access to the liquidity. That's no longer the case anymore. And I think a lot of banks won't support that. And I think a lot of banks won't support crypto because of what happened with SVB and SI. So when you look at those perspectives, like I don't see how they can do it, like get money into crypto without having money like basically sitting on their platform ready to turn into USD or sorry, is it USDC? Yeah, USDC. So it's a tough call, to be honest with you. I think USDT has been liquid for a long time. Do I think that they probably have all their assets to dollars? Probably not. But I don't see people panicking out of it. It's been around a long time. USDC, on the other hand, they're part of Coinbase. Again, Coinbase, I don't think they're going to do any shady stuff. I just don't. So I think even if USDC were to get unpaid, they would fix it. They would add the liquidity or burn the on-chain dollars that don't have back-to-back, dollars. Whenever you see the unpegging, it's basically the dollar. There's not as much dollars in circulation as there is their stable coin. And that's what the depegging is. But if they end up in a situation where they can't print more stable coin to be able to keep up with supply that is being requested, that's just something they got to deal with, right? You're going to see that downturn. But that kind of inconsistency can create arbitrage, and that kind of arbitrage can create trading on a specific stable coin. And once you start getting trading going, that stable coin then becomes unstable and nobody's going to want to use it. So,
yeah, it's a tough call. I guess the only other thing that holds me back from USDT is that all it would take could be some the states or some government coming after them, and then they can't, once they reveal that they've been laundering, which I'm sure they have, or that they can't back it 1-to-1, then it's like game over. As opposed to USDC, it's like transparent.
I think USDC is more transparent for sure. The problem with USDT is like they already got in trouble, right, for not having backing. And now, I don't know what kind of documents they submit to them, but now they have some kind of proof that they have backing, but I don't know how real that is. It could just be made up. But they basically got sued by the state of New York, and they have to basically, to be able to operate in New York, they have to submit I think on a month-by-month basis, all their assets showing that they have the assets back in the dollars that they have in circulation. So in that case, like I could say like they are reporting it, but again, I don't know like what they're requiring for them to provide. So I can't really say that at the same time. Does that make sense?
Yeah.
There's a lot of discretionary documents that you could submit that appear to have asset backing, but in reality, if they were looked into, they probably don't exist.
Right. Yeah, it could be all made up.
Yeah, it's a hard call on that one, really. If they got an investigation, I'm sure they could find some kind of liquidity that's missing there. I think everything that has money in it is illiquid. And I mean that not in the way like as in 100% illiquid, but I mean as far as like 20%
degree.
exposed, 30, yeah, it's just some degree
Yeah.
of illiquid in every system. Like, and that's all stable coins, that's all banks, like government itself, like the whole nine, right? So there's
How-
holes in the entire financial system.
Absolutely. How do you position your spread cash stable coins percentage wise, not dollar wise? What percent do you put into USDT, USDC, hold in banks and have in physical cash?
So for me, it's not really about holding USDC or USDT too much. I sometimes flip out of stable coins, right? And then I'll just sit in cash if I'm not looking to trade. And then I'll flip back into stable coins if I need to move that money around. And it depends too. Also, centralized exchanges obviously is where you have to keep that to be able to do that. It depends on like what centralized exchange I'm trading on. Like if I want to move that money out of that centralized exchange because maybe I'm a little bit too overexposed on having too much on the centralized exchange to be able to trade. Like there's a lot of factors. I do keep a trading portfolio on a couple platforms. If I lose them, I lose them, but I consistently keep the same amount on them. And if I win, positions, I'll take the winnings off of that platform. When it comes to like my spread, like I try to stay pretty decently spread between stocks and crypto. So like, and I know that may bore some people. I also have some bonds, right? It just makes sense at 5% to take those type of positions. Again, it's more about maintaining
Absolutely.
growth.
Yeah, 100%.
So, from my spread perspective, I'm probably about 12, 15% in crypto right now. And I have a lot of cash sitting in stock, like TD Ameritrade and stuff like that. Not in stock, but like sitting on the side to buy stock.
Yeah.
I have positions that I've taken. I've discussed those in a Discord. I try not to put positions because if somebody sees like how much you put in, like they may think that you're like all in, but in reality, it's not all in for you.
Yeah,
Everybody's
numbers
position
vary.
size is different. Yeah. So
I like percentage. Go ahead.
Yeah.
Sorry.
No, you're good. You're good. Yeah, and from a percentage standpoint, it's pretty spread. Like I said, like probably like 12. I'd have to sit down and kind of do the math, but I think between 12 and 15% in crypto, and then the rest is basically, I would say probably like 70% in cash and stocks, and then probably about probably the remaining in bonds, I would say roughly. And it's just me protecting capital and creating wealth. Again, a lot of people think they have to go all in on position. Like, let's say somebody has $20,000. They think they have to put 20,000 on a leverage position to be able to create wealth. It's like, no, you could take $1,000 and you could trade that throughout the year and you could turn that into another 20, right? And then you could take that 18 of that, put it out into other assets, continue to purchase, and then, continue trading the same portfolio size you had originally and just keep creating wealth from it. And then once your wealth grows so big, then you can up your trading position, right? But you need to have a stable side position to trading position. You should never blow your whole trading position out. Like if you're blowing your entire trading position out, then you're basically doing it wrong. Yeah, you got to stop and you got to rethink your strategy before you end up actually blowing it out. Like if let's say you have like $1,000 a trade and you've gotten yourself in the position where you're at maybe like $500, you need to rethink like how much you're allocating to the trade, right? Like I got some people in the group, great strategies, right? Like I got one person, I think Vincent, I think he's doing like $10, $20 per trade. And that sometimes he's up like 80x, 50x, 20x. He's turning $10 into like $800. And
That's amazing.
When you think about things like that, his risk to reward is much better, right? He's got a good risk to reward strategy. And everybody can do that, right? At the end of the day, anybody can do that. Like you don't need a lot of money to make a lot of money. You want to do this gradually and slowly and methodically. A lot of people are trying to race to the end of the tunnel. It doesn't work like that. It just doesn't. You have to trade slowly and methodically. You have to think about your trades through and through, and don't take them on emotion. Don't take them on price jumping straight up or price dropping straight down. You have to plan out the move and take the move when it comes to you. And if you miss the move, let's say I put in a put, right? And I put it at like, I don't know, what's Met at 195. let's say I put in a put and I put my put in for here, or not put, sorry, my call for here, 127. Let's say Facebook comes down, hits 131, bounces back up to 140, and I try to make the call here. No. You take the call. If you miss your entry, figure out what you did wrong. And then look for your next setup. Once the run moves, you're looking for a put. Why are you looking for a put? Because the move has already happened to the upside. Now you're looking for the resistance to take the put to the downside, and then you can look for the reentry on the call to take it back up to the upside. That's all this stuff is at the end of the day. And if you're looking for positions to, when you're talking leverage, you have to take higher time frames into account. They're much better at reading price than lower time frames. Just looking at it 4 hours and stuff like, how are you going to trade this on a put to call spread in like a 1 month, 2 month scenario? If you are day trading stocks, you're going to get destroyed. You're going to get wrecked, like, especially in this market. Like you have to methodically think about where price can go. I think 2 to 3 month spreads are really good. 6 month spreads are really good right now. And a lot of them are showing to the downside. Again, you also have to account for theta decay. That's another thing too. And if you guys don't know what that is, it's basically however long you had the position open. If price moves against you, you're actually losing a percentage of your money. The more and more you get closer to your date. And so you're basically paying to hold the position. And if the price moves in the direction you think it will, you'll get paid well. If it doesn't and it continually ranges where you're at and you're at closeout date, you probably lost a good chunk of your position. That's why you have to think about these things methodically. You have to understand where price is and where you're looking for price to go, whether that's up or down. But again, it's all about strategy outside of that, is coming into a trade, knowing your entries, knowing your exits, and knowing, hey, my price was a hit. I need to go back to the drawing board and figure out why my price wasn't hit. Not I need to jump in right now.
Side note, you also called it with bonds. Shortly after, it was one of the Saturday Q&As. I think it was that same week they started to drop. Now everyone's flooding in, and you're looking at like 4% range. With
Yep.
everyone flooding in, does that make do the bids drive the rates lower?
Yeah. So
Or-
the more people are bidding long, and the more it's going to drive to the downside. And I think bonds are getting flooded. I really think they're getting flooded. The problem with bonds, I'm going to show you a scenario, and I've been really good with bonds. A lot of people have been calling the opposite of whatever I've been calling. I don't know why. I don't know. Like, it's been very apparent the direction of bonds, and I'll show you why. But look, I called bonds at like 1.2% to 5%. And I had a ton of people tell me I was stupid. And I was like, okay, we'll see. And we hit it, man. It's crazy. 5 was my top. Let's see, US2. So
Yeah, now everyone's talking about it.
Yep. Look, I called this stuff all the way down here. Like, because I saw the move above here and I was like, oh. And then I went like this, right? I'm going to show you exactly what I did. I was like, this looks like it's getting bad because of the buildup. They're going to go all the way up high. And I was like, well, where would they go? And I was like, and I looked across because I was expecting some kind of like scenario like 00 or 08, 09. So I ran some lines across the highs, right? And we got 06, 07, 08, or here's 07, sorry, and then 08 and then 09. This was the bottom of the market right here. But if you look here, they consolidated the high here for a while. So I was expecting them to consolidate, but this looks like it's deteriorating a lot faster than what I anticipated. And if they break this low right here, we're going to see a flood in the bonds. And that what that means is that the market itself is going to tank, right? So if we see a break of this low, which right now we're holding, look at that, it's perfect. It's a perfect hold, right? And that comes across all the lows here. Look, all the lows here, this is strong support. If we break that strong support, this is a waterfall move. It's gonna just loop all the way down to 1.4. We're gonna see a big buy up right here, or sell off. Sorry, I said buy up, sell off, because a lot of people up here will be getting out here, right? Because they're gonna sell at a premium. Like, hey, I got 5%. You're buying at 1.4%. We'll sell you these 5%. You'll make more interest on it, but you got to pay us more than what we paid for them. And people will buy these up right here. That'll be your sell off, right? You'll get your buyers, and then you'll flood back down to the next level. And this is your next level. And this is where the bottom of the market was. And I'm anticipating this cycle will again not repeat, but be nearly the same thing, right? That move back down. Now, I don't know if the bottom will be here, maybe the bottom will be here, but if bonds get to these levels, start looking at taking positions in the stocks, right? Because the bottom of the stock market will come in these zones. And then once the bottom of the stock market comes in, everybody's going to continue to bid bonds until they ruin them and they're not worth anything. That's what I'm expecting the bottom of bonds to be here. Right here. This is a strong support, right? Now I could be wrong. It could come in up here too. It could be a higher move here and a bounce off of that, right? Now this is a longer term move. Obviously, this will be years and years and years out. We get another situation where it goes higher. But this is something I've been watching, right? This is like, we'll probably catch some support here too. This is the longer term trend high. So there'll be some support in here. And then if that breaks, you're going to see a waterfall move again. And then this is where stock markets they'll just get crushed. Like you see a buy-in on bonds like this, like the stock market's tanking hard. It just is.
You still pay federal taxes on bonds, right? On your gains.
I think bonds are tax-free. I'm pretty sure because they're government provided. So I think I think you loaning the government money, it just has its incentives. And I think that's why a lot of people flood into them. That's why their percentages are so low. Typically.
I was avoiding it because basically going from stable coin to cash would be like a 1% hit. And then I figured taxes would be like 50% of the gain. So on bonds, so I figured it wouldn't even be worth it. But if it's completely tax-free, then
yeah, I'll look into it and I'll post it later. But I'm pretty sure it's tax-free. This is actually my first time getting into bonds because it's been the best opportunity. And I told people I don't know, was that the because Bitcoin that you were in? That when I talk about bonds?
This was man, I don't know, 2-3 weeks ago. It must have been like 2 or maybe even 2. And you had mentioned this is the time to get in because smart money is going to just flood in because of the rates and how I don't remember X, Y, and Z, but I just kept my eye on it. And it dropped almost a couple days later. And now I'm just hearing it bonds on all the like Blockworks and some of the even Lynn
They're all
Alden
chasing
it.
They're chasing. I call it I think the exact top. I told people I think at 5% on the dot. And because I remember that space I was in. I think it was the spaces on Twitter. And I told people, I was like, is that 5%? I'm like, it's not going higher. I'm like, this is where you buy. I'm like, institutions are gonna start buying these. They just, it makes logical sense for a lock-in. Think about banks, for instance. This is going to be the best buying opportunity for a bank. Most banks can only get bonds, right? With their their deposits. They're only allowed legally to buy bonds with deposits. So
yeah, they're free from federal and state tax where the bond was issued. It's where I quick Google, which means that it's still, even at 4 and change, it's still it's something to jump into. Well, for me personally, for 6 months, I wouldn't mind locking it all up.
Yeah, and again, if you catch bonds at the high like I did, if bonds get down to these levels, you could sell them at heavy premiums, and people will carry them to term. So that's the thing a lot of people don't realize too.
Right.
Yeah. So and that's a really good way to make fast cash. You don't even have to hold them for the whole 2 years because you're at such a high percentage that people will pay premium to get them from you. So it's a really good it was, I mean, still is kind of where it sits, right? But like once it breaks this low, like that's gonna go fast. Because you can see it right here. Like it just literally waterfalls off the edge here and just goes. Same thing up here. Look, once it gets below this level, it just goes. And everybody thinks it's going to turn around, but really it's just going to start breaking. Like this is the highest zone of interest that I could find on a chart when I first talked about bonds. And I was like, dude, it's coming all the way to here. And a lot of people thought it was going to stop here. I was like, no, I was like I caught it right over here where it's going to run up, and now I think it's going to run right back down.
Yeah, it's
Good.
so it's 3 months is still at 4.5, 6 month 4.72. I mean, this is juicy for me.
Yeah,
Definitely jumping in.
Really, really, really good positions, I think, for bonds. And I know some of you would be like, bonds boring. I just want crypto. Look, I'm telling you guys, like, you got to diversify. There's lots of ways to make money in this market. Tons. You need safe ways, and you can play on safe ways if you want to too.
Yeah, I'm not doing anything. I'm not going to be trading my whole portfolio on crypto anytime soon. So it's like the best route.
Yep.
For sure.
100%.
To each their own.
Yeah, yeah. And if you're just sitting in cash, you can do short-term bonds.
Yeah.
Right? Yeah. Especially if you're anticipating a crash towards the end of the year, like I am, you could sit on a 3 to 6 month bond, pull it out later, use it.
Awesome.
Yeah, no worries, no worries. Somebody asked about Psych. I think this is a top move, to be honest with you. Let's see what the RSI is telling me. Yeah, stochastics high, RSI is we got some room on the RSI a little bit. It's a lower high. No. So this is bad. So even if price were to come up a little more, you got a significant downturn against a double top move, right? So when you get a significant downturn against a double top move, it just basically it means momentum is being lost here. So price is probably looking to continue to lose momentum, right? But it could be if price continues to form higher lows, that'll be positive. And you can get in on the dip if you're in it. If you're holding it, I would take profit on this because even if you're bullish on it, that would be the bullish thesis. If you're bullish on it, price will more than likely continue to build under this trend to the downside. And then that'll basically be falling, right? And then price will hit the 30, start to build back up, which will be the breakout move over here. And then once it breaks out, then it'll continue the price range you got here. But overall, trend wise, right? You also have to look at the overall trend. Look, you're still way, way, way far away from that trend. So because you're so far away from this uptrend that you have forming here on Psych, you really want to be looking to take profit because more than likely it's going to roll back to trend, bringing it back down to 233, which means you can get a decent amount of profit here. And then you could get a better entry at a lower position, right? And then take it higher. And that'll give you just more stock. So if you're interested in this one, that's kind of the way I would take it. Again, this is on the monthly, so this will take a while to roll over. So this thing may be in a downtrend for a long time if that ends up happening. Let's see what the buildup took here. 1, 2, 3, 3 to the low. 1, 2, 3, 4, 5, 6, 6 to the high. So they're probably looking at at least 4 to 6 to the low, and then it'll be a move back out from there. But I expect a retest of the trend for sure on this. So that's just my opinion on this one. Yeah, energy is definitely something you guys can keep an eye on. I'm looking to buy Exxon. That's just one of the ones I'm looking at. I'm looking to look at different petroleum manufacturers. I think a lot of people think that gas is going to be gotten rid of. I thought about this from a deeper level. I'll be real with you guys. I really did. And I think it's more than what people think it is. I think energy cannot keep up with not necessarily demand, but the amount of reproduction that the world is occurring, right? Billions and billions of more people. So we have to find ways to kind of offset the energy. So we're doing that through electricity and stuff like that, but oil is not going anywhere. Yeah, I'll pull up QAX in a second. What it is we're trying to find ways to offset the use of oil. But oil will continue to grow. It will continue to be a big portion of our energy portfolio and our energy usage in the world. Does that make sense to everybody? Electric cars and stuff like that are just offsetting energy use. That's all they're doing. This whole narrative of, oh, we're going to switch completely to electric cars is just BS. Like, at the end of the day, the US and many other countries, I think, are just finding ways because they see the writing on the wall that the human population is growing at such a, such a rate that energy at some point will not be, energy consumption will exceed energy production. So we had to find ways to offset that, and they're trying to do that through electric cars. They're trying to do that through electric, whatever, SUVs, electric, I can't think of the word, diesel trucks, whatever I call diesel trucks. Forget what they're called. But basically electrifying a lot of these different things to try and offset the usage of fuel. But fuel will always be the main component to a lot of energy usage.
Interesting, because there's going to be millennials aren't having kids, so.
Oh, in the US,
I wonder what it's.
in the US. In other countries, there's still an alarming rate of births, right? And those countries are mainly countries that don't, or I won't say don't, but poorer countries that can't really afford protection, can't really afford to not have the child, right? They can't afford abortion or whatever. There's a lot of poorer countries that are still producing at rapid rates.
Right.
Almost
India.
rabbit rates, right? Yeah, India, Venezuela is a big one, right? I'm not saying India is necessarily poor, but all these countries don't necessarily approve of or do protection, right? Venezuela is a very poor country, so the being able to afford, contraceptives and stuff like that is kind of out of the scenario for them, right? They're not really able to get into those type of situations, and if they get pregnant, they aren't able to afford abortion, so they have to have the child, and then if they get with another man, they have another child, another man, another child, or if the man sticks around, great. If not, then they'll have multiple partners, multiple children, and those children will grow up, and they'll continue the process. So these are things that why developing countries are promoting not having children. I think I do think it's a form of depopulation. But it's more in the fact that it rebalance the population that's currently growing in other countries. And I'm not saying I support it or don't support it. You do you at the end of the day, whether you support it or not. I'm just telling you kind of what I think their thought process is behind it. Just so you guys kind of get a broader perspective, a more neutral perspective than they hate us and they don't want us to reproduce. And vice versa, right? We don't need kids, yada yada. Everybody's from different perspectives and different backgrounds on that subject. But I think that's the broader thought process behind it. I guess it's a theory, but my thought process on that.
Yeah, here I am.
Let me put QA real quick. I always try to stay as neutral as possible. I don't like to get into sticky subjects necessarily, right? I have my own personal opinions and stuff like that, but I try to stay neutral on everything with you guys because I don't want anybody to think that I'll think of any of you individuals as differently because you may have a different perspective than me. Because I don't think about people like that. Some people do, but I don't.
No, you do. You're very neutral. You do a good job at that. I'm just thinking in the US, it's a massive push, and it's too aggressive for. I think we've discussed this before. Or you have.
Yeah.
It's just too fast. Especially for our client population.
I get that, but you got to think about it like this too. The same thing happened in China with the one-child policy. There's a lot of dictator-ish type moves that got played in a lot of different first world countries. And it is what it is at the end of the day, is the way I look at it. Because technically they can't control what you do as an individual. If somebody else wants to do whatever they do, just let them do what they do. It's like, but do they try to make you think differently, sure, but you know, if you're in the IQ level above 90, then you can think for yourself, is the way I look at it. And I think every individual in this room and everybody who comes to my meetings and that, you know, keeps an open mind. And when you think about it from that perspective, it, you know, whether, no matter what side of the aisle they come from or whatever, like everybody's got their own opinions, but everybody, you know, they think for themselves, I think, regardless of what side they're from. Because I don't think anybody would be here if they didn't think for themselves. They'd be screaming on Twitter, telling me how Bitcoin's going to go to 300, 400,000, 1 million, 10 million in the next, you know, 2 months. Let's see here. QANX. I mean, it looks like a stair step pattern, to be honest with you. Let's see. So we got the high here. This is kind of a consolidation zone, but then we got a drop, and you got to look at it from a broader. I know a lot of people are like, oh my gosh, this looks horrible. Look at it from a broader perspective, right? You're probably going to recapture the entire wick here, but this is your current consolidation zone. That's where you are in QANX. I'm not sure if this is the correct token or not, right? Because I know they opened a new one, but that's how this looks. I don't think this is the right token either. Do you have the new token? Who said that posted that? Sorry, I'm just reading through here. iPad. Do you have the new contract for the new one? I don't think that's the right one. I think that's the old one. Yeah, I know which one it is. Hold on just a second. Let me see if I can
I
find.
haven't been able to find a good chart on that on TradingView at all. They're all bad.
You're not. Those are all the old ones. So what we're gonna use? We're gonna use Dex tools. We'll use this. That should give us a chart. And then we'll just put QANX new contract. Ooh, that's bright. QANX. Migrated to BSC. Oh, here is our contract. We got that. Put that in here. And the top one looks, yeah, that looks good. What's the liquidity on this? Man, there's so many pairs in here. Here, let's go this one. When in doubt, go to the worst side out there. Shiba Cat, interesting. What? Is that right?
That one was against BNB.
Oh. It's old ERC and BSC to contract to new contract. Here we go. My bad. I was like, that looks right. All right, let's try this one. Yep, this one looks good. All right, so this looks like the correct chart. Now this against BNB, not, let's see if we can find a cash pair. This is a site you guys can use that like basically just shows us, you know, what things are one for one. Let's go here. This will be better. I hate when they put them against stables, or not stables, but against pairs like BNB because it makes it difficult to tell price. These are probably fake contracts. Just FYI, this looks like the real one, 69,000. I mean, that's your chart right there. So, I mean, if you're looking to buy, it's at the floor. 1 cent. Where's that 0.01 BNB? Dollars. It says 1 penny, 1, 2. So I guess this is measured. Yeah, measured in dollars. There we go. Yep. And then BNB would be measured this way. So in dollars, you're looking at 0.012. There's not a lot going on here. Let's see if we can go. Unfortunately, with crypto, just for those of you who don't know, this is the direction you have to go with sometimes to these sites to get rather than TradingView to see what's going on. It's too new. To be honest with you, 12-hour.
In the event of a black swan, kind of like SVB, affecting the crypto institutions that it funded for, say there's more banks that are involved, like worldwide, collapse financial, or just a heavy dip, won't that also affect the funding for all these small alts and potentially it's game over for them?
I mean, some of them, yes. Some of them are funded in different ways. It just depends on how the VCs are dealing with it. A lot of VCs, like the capital that they're using that's in the crypto space, has been brought in already from cash from the banks and stuff like that. The only way it'll really affect them, like let's say, like in the case of the stablecoin, right, where basically we had an issue with no liquidity coming in, but we had a lot of the stablecoin being sold off. Those would be heavily affected. If they're trying to defend a peg, that'll be a big issue. This is why you don't want peg tokens, which means one token pegged to another. If it's just a coin like that they have, like ADA or whatever, the money they have in the bank is going to be money that they've taken from selling the token, right? And they're using probably to fund their project. So if they have money in the bank, that would be the use case for that. But yes, in the scenario that they have money in the bank, that money gets taken, a bank collapses or something like that, and they need to find funds because they don't have funds, then the project owner or project creator or project maintainer may sell into the token to try and create more liquidity to cover the funds lost. So yes, that could disrupt the crypto space in that way specifically. Does that make sense? The bank itself is not the downfall of crypto. It's, do these people that run these projects get wrecked? And do they try and liquidate the community to recoup funds? Does that make sense?
Yeah.
And I think that's the way a lot of people got to understand it. It's not about the bank, because the banks aren't directly related outside of holding funds that are related to the project. It's because the liquidity pools exist in crypto. They exist on the blockchain. They don't exist at the bank. But I mean, that's a deeper conversation we get into and I know we were going to get into a lot of other things today. It's actually kind of run late, but I felt like a lot of the things we covered were necessary because there was a lot of conversation going around and just a lot of confusion, I think, with like the whole bank system situation and everything, and these bullish narratives that don't relate to what's going on. And I wanted to clear up, like, I do have a bullish thesis. I do have a bearish thesis. At the end of the day, I'm a bear before a bull right now, just at where we set in price. I think BTC is way overbought. I think SPX is another one that bounced up. And I showed you guys this chart with SPX. I want to show you guys one more time. My expectation here for the SPY was for them to run to the 15, which they did, right? They ran all the way up to the 15, hit it. Well, they came a little bit short. I was expecting them to run down to the 16, which was the low here, right? And this is for here, by the way. And then I was expecting for them to come back up again on the 17 here next month, hit the 17, and then flush the market down to the lows. I'm expecting to move all the way down to 3,600. That cross move right there. And then my thesis is that we continue to 3,200, but not yet. So we hit that 3,600 range, maybe back, and I haven't drawn this out yet, but I'll tell you guys, we maybe come all the way back up to 3,800 retest, And then we push for the lower moves, right? The real liquidity zone, which is this zone right above the previous liquidity. That's where I think the market's heading. And you can see it's slowly degrading tops that are getting further and further from the top of the channel. And then as those degrade and price comes down, this bigger bull flag fills out and then breaks out. Now it's not going to be like this, guys. Like I know I drew it like that, and that's how these people draw it, but it's going to be a gradual build, right? And that'll give us our round bottom too. That's my expectations for price right now. And if I expect this for the SPY, I sure as heck don't expect crypto will survive a drop like that from the SPY. Because you have to understand, there's only so much liquidity that exists. And as the SPY drops, you're going to see people looking for opportunity. They're going to see Bitcoin up here. They're going to see SPY down here. And they're going to rotate their money from Bitcoin over to SPY to pick it up. And then after they get the SPY bounce back up, they'll take profit here. And they'll roll, and Bitcoin will be rolled down. And then they'll buy back into Bitcoin. And then they'll come back over to SPY. And money is just getting moved back and forth between spaces. That's what's happening. That's why SPY down, Bitcoin up. They're still correlated, just opposite. When there's less liquidity, they can't push both at the same time. They have to take from one side to give to the other. Then they take from that side to give to the other. And that's why when you start to see price move out, it's because retail is supporting the dips and the market maker is taking profit. And now you've got both of them moving simultaneously side by side, forming higher lows. And now that would solidify a bull run. Why would that solidify a bull run? It would solidify a bull run because you have all assets moving at the same time, which means there's a lot of liquidity. A lot of liquidity moving around. When there's a lot of liquidity moving around, there's lots of upside potential. When there's less liquidity, assets move one at a time. Does that make sense to everybody?
Yes, sir.
Yes.
All right. I have to make some dinner and stuff like that, but we will chat again. I'm sorry I didn't get to everything we talked about. I definitely was going to be there, but I have to take care of some stuff though. But we will chat again. I'll continue to be in the spaces. I'll continue to be in the Discord to help you guys out as we need. Again, you know, trying to stay market neutral with things, just giving you guys my honest opinion.
All good. All good.
Thank you
Thanks,
for your
Will.
time, man. Thank you so much for your time, Will.
Thanks, Will.
All right, we'll chat again. See you guys.